American came out swinging with their restructuring plan, but they may have missed, judging by the share price reaction. It's a radical plan to effectively unravel the business, break it up, but it's not really radical thinking. The argument's always been that Anglo's trades at a discount to its peers. The way to unlock that is to break the business apart because the parts are worth more than the whole. So this isn't anything new, and a lot of investors, a lot of shareholders in Anglo-American will feel like this is a bit of a case of deja vu because back in 2016, at the end of a bear market then, the company was on the ropes, and the CEO at the time, Mark Cutifani, came out with a radical plan to restructure the business, which involved selling off a bunch of assets in iron ore and nickel and coal. Couple of months later, the cycle turned and nothing happened. And so I think a lot of Anglo shareholders will be wondering if the CEO this time around keeps to his word. And so there is an issue here where Anglo shareholders will be asking themselves, is a bird in the hand worth more than two in the bush? And that's what Anglo-American management is trying to convince them as well.
All right, so at the end of the day, can't BHP just go directly to Anglo-American shareholders and won't the shareholders say, yeah, we'll take your deal?
Yeah, the challenge with going hostile, going direct to shareholders is it effectively means you need to buy the whole thing and then restructure it. And that seems to be a red line for BHP management. They've insisted on retaining that condition that pre-transaction, Anglo-American needs to spin off their two large South African listed subsidiaries, whereas going direct to shareholders mean that they may have to do it themselves. And that's difficult to do. I mean, there's regulatory issues. It requires finesse. You need strong relationships with the government and with other stakeholders in South Africa. And those relationships aren't really there with BHP anymore. So that's something they'll want to avoid. Plus, if you do that, you're transferring a lot of that execution risk over to your own shareholders, and there might be pushback. So BHP effectively has, if they're going to kind of stick to their principle on the pre-transaction spin-off, they have price to play with. So that's either raising the offer ratio further or offering a cash component. But they need to be really careful here not to give away the farm, because on our calculations already on the current bid, they're forfeiting a lot lot of the synergy value already. So I don't think there's, I don't think there's a huge amount of room they can move.
Yeah, Elon Olsha, we appreciate it. We have to leave it there, up against a clock. Bloomberg Intelligence Senior Metals and Mining Analyst. We very much appreciate it. Coming up, James Demert is Chief Investment Officer at Main Street Research. We'll discuss, do you buy equities when the S&P is at a record, when the Russell is a stone's throw away? This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Yeah, I'm John Tucker in the Bloomberg Newsroom. This business flash being brought to you by BNY Mellon Insight. June 4th to the 6th in Nashville, Tennessee. Don't miss the essential event for the financial advice community. Visit insight.bnymellon.com. Of course, I'm not going to be there.
Everybody who is anybody will be there, John.
We'll send you some selfies.
It's just not the same. Several of the major stock averages on track to set records. Retail sales stagnating in April, weakest showing in 4 months. The Consumer Price Index showing the rate of inflation also slowing. These are Fed-friendly data. And Ed Yardeni at Yardeni Research, sees stocks powering even higher.
It's a bull market. You know, I can't time it exactly and precisely, but I think we're heading towards 6,000 by next year and 6,500 the year after that. So that's a 25% increase.
Right now, S&P 500 on track for a record close, up 45 points, up about 0.9%, 5291 on the index. The Dow's up 263 points. NASDAQ 100 also on track for a record of 178 points, a rise of almost 1%. And the Russell 2000 is right now up just about 1%. As far as yields, the 2-year is up down 7 basis points, 474. The 10-year, 8 basis points lower, and that's at 435. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. The peripatetic Paul Sweeney and Alex Steele. Back to you.
Do you really want to go to Nashville?
Yes.
Would you go to the water park?
I'd do anything.
All right, well, maybe we make that case. All right, John Tucker, thanks a lot. I'm Alex Steele alongside
You want me to watch your
Paul
child,
Sweeney.
right?
No,
Like
I'm not
babysit.
bringing her.
Oh,
But
you're
do you
not?
want to?
Yeah, we'd have a good time.
Yeah, we totally have a good time. This is Bloomberg Intelligence Radio. We bring you all the top news in economics and finance. And with the help of our Bloomberg Intelligence analysts, they cover 2,000 companies in 130 industries all around the world. We also bring you the view from the street and sort of what do you do in this market when you're at record highs and the direction is higher? You just buy the stuff. You buy stocks, you buy bonds, you sell the dollar. That seems to be the trade. Let's get the trade with James Demert. He's Chief Investment Officer at Main Street Research. He joins us via Zoom from New York. All right, James, do you buy at a record? Simple question.
Hi, Alex. You do. I think you do. I think investors have made a huge mistake for the last few quarters of just waiting for something to break before they buy, and it's been a mistake. I think it's going to be a mistake going forward.
So what do you buy, James? Let's take it to the next level there. What do you buy here? Do I just load into my big tech stocks that have worked so well for me over the past couple of years, or do I try to get a little creative?
Well, I think that investors, a lot of investors are focusing on the wrong thing, which is the Fed, and they should be focusing on what's driving this market. It's what this market's doing. It's discounting this new AI tech-led business cycle in bull market. And so when we think about what to buy, even at levels like this, we want to think, well, if this is the case, AI tech-led biz cycle, it's going to be productivity growth and fast-growing earnings. Where do I go for that, right? There's 10, 11 sectors in the economy. And if rates stay where they are, which we think they will, you want to go to tech for sure. You want to go to telecom. And everywhere this AI productivity growth can affect. I think healthcare is definitely one of those. I think the utility sector is sort of interesting here, very inexpensive. Yeah. Industrial companies, financials, right? Jamie Dimon saying a few weeks ago how AI is impacting JP Morgan. So I think you kind of want to think about this as a la 1990s, if you will, where that's the last time we had this huge boom of productivity growth. That was a different technology, obviously the internet. Now we're in the AI phase.
Something to say on that, because 1990s didn't always end well on that end. But before we get there, for utilities, I find that so fascinating because usually you think of utilities as just a straight-up dividend yield play, right? Are utilities a growth sector right now? Can you play it and value it like a growth sector?
Yeah, Alex, this was my grandmother's favorite sector because it had no volatility. Right, predictable dividend yield. But here you have a different story, right? If it's an AI tech-led business cycle, particularly with EVs, and you've got these AI chips just churning away, needing so much electricity, we're looking at the utility industry as potentially a very big growth area. So the grid is going to have to get way bigger to support what we envision is a 7 to 9 year business cycle led by AI, profit growth, productivity growth. And I'll tell you, not just the utilities, but who's going to build that grid? The industrial companies. And I think that's one of the reasons you're seeing, the Caterpillar tractors and that sort of thing doing quite well over the last few quarters. Discounting, not what the Fed's going to do, it's discounting, hey, this is a new era, a very different type of business cycle.
And James, one of the names you have on your list is Apple, and it's on a lot of people's lists, but it's obviously facing some headwinds, notably China. But one thing that it hasn't yet quite gotten into its multiple is AI. Do you believe the AI, pixie dust can find Apple at some point?
We do, and I think that Apple's on a lot of people's lists as a bearish call. We are absolutely the 180 degrees opposite bullish, and we think they're late to the game. There's no question, and that's frustrating as a shareholder. But as we listen to the conference calls and read the tea leaves of where Apple's going here, and you can see it with their recent sort of partnership with ChatGPT. We think in June 11th is going to be a big call from Apple in Cupertino and Cook, and I think they're going to talk about, hey, we're bringing AI to the iPhone. We envision it as a supercharged Siri, like a personal assistant Siri, which is way better than what we have now. Might start with subscriptions. Think about the giant installed base around the world they have. And then it probably is going to force us all to get a new iPhone, maybe in a few quarters to support it. So we are fans, 27 times earnings, neglected, one of those that you want to add here.
Mm-hmm. Yeah, I know. It's like I hate it when my phone just one day is like, we're done here. Take us to the store. We have to get a new one. You also like ASML. Why would that be why do you like that for the AI trade? Like, there's tons of those kind of guys that we can start playing with. Why is it that one for you?
Yeah, ASML, we're global investors. We love the overseas exposure, right, from the Netherlands. But this is a company, no debt. And this is an integral part of what makes an AI chip work, right? So there's just a handful of companies that actually do the design that NVIDIA uses, right? So NVIDIA is buying ASML technology to design and fabricate these chips. So they're really at the beginning of the cycle of making the chips. Absolutely important company to own, not just a chip maker. They're the ones helping the chip makers make the chips. So very important to be at that front end, the most important company on that end.
How about in the fixed income space, James? Do you guys allocate there, and if so, how do you do so?
We do. A third of our assets under management, we manage about $2 billion, are in fixed income, and our view is the Fed may not do anything. And so here's where you want to say, well, if rates have, let's say they peak, but they're not going to go down, you want to go out here in duration. I think it's safe to do that. I don't think the Fed's raising rates anytime soon. I think, in fact, at some point they'll lower them. I don't think it's this year. And so you want to go individual bonds, high credit quality, based on your tax circumstance, either own munis or corporates. I love corporates in a non-taxable account. And, don't feel uncomfortable going out 20, 25, 30 years. Lock that yield in. Make sure no one can take it away from you because, yes, eventually rates will come down and those will not be available. So we sort of ladder a little bit on the short end, tons in the middle, and lots on the long end. Very different than what we were doing 3 or 4 years ago.
Mm-hmm. Are stocks expensive right now? How do you price that in? I mean, there's so many different metrics, particularly when you compare it to, say, the yield you're getting on the 10-year. Some might say, yeah, you're not getting compensated at all. That risk is not priced in. What do you think?
Yeah, Alex, I think people are misunderstanding PE ratios. First of all, when you're at the beginning of a business cycle, PEs can be sort of an illusion, right? Because we look at forward earnings, and that E is underestimated all the time. So it sort of makes the PE seem a little higher than it is. And more importantly, and I think this is the real problem investors are having, is if you look at the S&P 500 or any normal index, you got 7 stocks trading at 35 times earnings, and you got the rest of the market trading at 15. Now, anytime that you have financials at 11 times earnings, which is what's going on today, 11 times is almost historic for financial stocks. and the rest of the market trading at 15, that is a value proposition as we move towards a growing, expanding economy, and one that we view as GDP plus 4%, not GDP plus 2, which is what we had for the last 20 years. So higher growth, 15 times earnings, absolutely. And particularly all these sectors that I mentioned earlier that have not yet been impacted by the power of AI and productivity growth.
All right, James, thank you so much for joining us. James Demmert, he is a Chief Investment Officer at Main Street Research, joining us from New York City via Zoom, so we appreciate that. What do I do with oil here at $78 for WTI crude oil?
Yeah, that's starting to be demand worries now.
Demand worries.
Yeah, and we did have, you had the oil inventory numbers that came out today, and it was relatively mixed. It didn't really move the needle on that end. But yeah, we're starting to hear some demand worries. You had crude stocks did decline in the U.S., but a lot of that went to the SPR, the Strategic Petroleum Reserve, so it wasn't really end user demand. Refiners are starting to buy some crude to heat up for the summer, no pun intended. But fuel demand is not great. Like the demand where we should be at this time of year right into summer, we're just not there right now. So demand problems.
Daily national average gasoline prices, unleaded, $3.60 a gallon, off a recent peak of close to $3.70, $3.51 at the BP on Route 35 in Wall Township, New Jersey.
Maybe everyone's flying. Maybe everyone's flying because jet fuel demand was at the highest since 2019. Really? So maybe Tucker's taking his private jet to places rather than
the Falcon jet out of Teterboro.
Yep.
It's got its fueled up this afternoon. I don't know where I'm going. I got nowhere to go.
With our news in New York City, here's Michael Barr.
Thank you very much, Paul, Alex, John. President Joe Biden and former President Donald Trump agreed to hold 2 campaign debates in June and September, but there were no guarantees that that would happen as their camps appear far apart on key details like the setting and ground rules for the potential face-off. Biden says that he will not participate in fall presidential debates sponsored by the nonpartisan commission that has organized them for more than 3 decades. Biden campaign chair Jen O'Malley Dillon told the Commission on Presidential Debates the Biden campaign objected to the fall date selected by the commission, which come after some Americans begin early voting. CNN says it will host the Biden-Trump debate at 9 p.m. on June 27th. It was a primary election day in Maryland, West Virginia, and Nebraska. Angela Also Brooks defeated David Throne 54 to 41% in Maryland's Democratic Senate primary. She will face former Republican Governor Larry Hogan in November.
You know, we've always been an underdog. They've always counted us out. But every single time, together, we have beaten the odds.
Hogan got 62% of the GOP primary vote. A new study claims that riding in a car or a truck for long periods, especially in hot weather, can be hazardous to your lungs. Researchers at Duke University tested 101 vehicles and found that nearly all contained potentially carcinogenic chemicals from the fire retardant material in seats, headrests, and other padded surfaces. Dallas physician Dr. Jill Wagner says, air out your vehicle before you drive it, especially in the heat.
In addition to cooling down the car, let the windows down for at least a brief period of time so you can allow some of those chemicals to blow out of the car.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. Stocks rising toward records with the hopes that inflation finally is heading back in the right direction after the pretty discouraging start to the year. Retail sales also falling more than expected, and the stocks that tend to benefit the most from lower interest rates helping lead the market. That includes real estate stocks among the leaders right now. Meantime, Lara Raim, chief economist at FSJV, says, you know what, the Fed's higher for longer stance does remain in place. She was speaking before this morning's data.
I don't think all of this is going to be resolved in one number. The markets clearly really want rate cuts, and if the Fed wants to give it to them, they just want to be patient and do it right, and it's going to be later than markets initially expected.
And NVIDIA also giving a lift to markets. Of course, they report on May 22nd. Those shares right now up 3.2%. Then we hear from Walmart, their results tomorrow morning. Right now, those stocks are unchanged. And the meme, what are they called? The scratchy kitty stocks, the meme stocks?
Roaring kitty.
Oh, roaring
meme
kitty.
stocks.
Oh, pardon me. GameStop. Feel obliged to do these. 32% lower right now, GME, and AMC Entertainment down 21%. Overall, S&P 500 44 points higher. That's up 0.9%. 5291 record territory. The Dow up 251 points. NASDAQ 100 up 178 points. That is up 1%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Paul and Alex.
Thank you so much, John Tucker. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news with our Bloomberg Intelligence analysts all around the world. They cover 2,000 companies and 130 industries. And we also tap our amazing Bloomberg News team who are deep in the weeds of everything you need to know and all the market action. And one of them is Bailey Lipschultz. He's been very busy. He had to actually cancel radio hosting yesterday.
I left Carol hanging and I haven't apologized.
Because of the meme stock craze.
I know.
You have a day job. It's cool. It's cool. So we know the meme stocks did some stuff for 3 days and they rallied and they're giving back a little bit today. Did any of them issue shares or anything and take advantage of this?
So AMC had what we call an at-the-market offering that was approved back in March. That enabled them to sell shares at the market, have their bankers just keep pumping and creating shares to raise up to $250 million as fast or as slow as they would want. They did about half of that prior to the mania and announced on Monday that they completed that, so raised another $125 million on the back of Monday's what turned into a 78% pop for the shares. Then today, they announced plans to do a debt for equity swap. So swap out some debt. Your debt holders now become equity holders. You create more of those shares, all to try to address the fact that they have a few $1 billion on their debt load, most of that due in 2026. So the company has said they're actively talking to lenders to try to work on addressing those issues.
AMC Entertainment, all right, it's down 20% today, but just about $1 billion of stock has traded today. I mean, this isn't pennies. This is real. And money, when it goes back to my thing, like, who's trading this stuff?
And that's what we wrote in my view, a good story, because obviously I wrote it.
You.
But we wrote a story yesterday that kind of dove into the fact that when I talk to people who advise hedge funds, these momentum quants have gotten more sophisticated, caught on to the playbook from 2021, and are buying and selling and trading these shares. So helping create that big rally we saw Monday and Tuesday, and likely getting out of the stock, whether they're in the trade for 2 minutes or 3 days, they buy when stocks are going up and then they quickly sell. And the whole goal is to, as we wrote, basically, in a way, front run retail.
Mm-hmm. Whoa. I'm looking at is this right? AMC Entertainment's got $9 billion of debt?
That includes their leases. So call it 4.5. 4.5.
But still, they have...
It's sizable relative to their cash.
I'm looking at EBITDA. Let's just take 2025's estimates, 500 million. So still 10 times levered. Again, having banked these guys in the past, 4 times is the multiple is the leverage I would put on this thing. Maybe if the sub guys want to go above it, that's their business. But crazy. But at least AMC's trying to.
Yeah, I was going to say, but don't we like the fact that the CFO is like, guys, let's do this, right? That's a good thing.
It's a good thing.
And that was part of it, right? So a few years ago, they created these 8 preferred shares because they couldn't get approval from investors to sell more shares, because you have to get approval to create more shares to expand the number of shares you can have outstanding. Right now, according to B. Riley's Eric Wold, he estimates the company still has 191 million common shares authorized but not yet issued. So they can hit another ATM, or they can continue to do some of these debt swap deals to try to address, again, the fact that they have a lot of debt and they have a lot of near-term debt. And Paul, as you mentioned, the underlying business is not really doing a whole lot.
Yeah, you know, you think about the theater business, it goes to the fundamentals of post-pandemic.
Yeah.
What's the demand for movies in theaters? And it is less, but it is still there. Probably the bigger issue, if you ask the theater owners today, is it's just not a lot of movies. And that was in large part because of the writer's strike and the actor's strike pushed everything back about a year. And then you've had some decisions by Disney saying, you know what, we probably are overplaying our Marvel stuff, our Star Wars stuff, putting it too close together. Let's spread that out. So stuff that was going to be in 24 is in 25. 25 is going to be in 26. So you put all that together, and if you're a theater owner, you're like, I ain't got that much to put in my theaters.
When's the last time you saw a movie in theaters?
In the last few months.
Last few months?
Yeah.
Okay.
A couple weeks ago, I saw Dune 2.
Ooh.
Yeah.
Well, I like going to the Nighthawk in Brooklyn where they have like drinks and food and they bring to your seat. Like, I like the whole experience. Like, I don't go to a straight up AMC and just eat regular popcorn.
Wow.
Anymore. So I do the whole, it's cheaper than going out to dinner. Like, you can spend like $120, you see movies, you have dinner, you got drinks, you got dessert, versus going and spending $300 at like getting pasta.
And that's been the big
Prosecco, though.
You can get a Prosecco at the
yeah, that's
at the
been
movie
the big
theater.
push
That's the
for
whole
AMC.
point.
They want to they want to elevate it, so they're making more money in terms of margins expanded on people.
Isn't that like distracting though? You know, everybody's chewing and eating while
really
you're trying to
not.
watch a movie.
No, they're doing it anyway if they're eating popcorn and stuff. No, it's actually, you get used to it. It's totally fine.
The seats are awesome. I
They're
will
really
say,
nice.
I saw a movie on Friday, I think, and the layback seats. I'd never been to a luxury
No, they are
movie
nice.
theater, and you're like, wow,
No, it's nice.
I'm laying completely horizontal watching a movie. This is awesome.
And the thing is, you know, if you're a movie theater, the economics of a movie theater is you don't make really anything on the ticket sales,
Right.
or as much, because you have to give half to the studio. Where you make it is in the popcorn and this. That's all your margin right there.
Or the Prosecco.
So the more you get, yes,
Brownie sundae.
exactly. So
Nice
the more,
kale salad.
and you know, they've been giving you crap for 100 years.
Yeah.
You know, some they're just finally waking up that if I really want to get that person off the couch in front of their 80-inch TV and the surround sound, I got to up my game a little bit.
Truffle salt butter popcorn. I'm gonna drop that right there. It's just beautiful. Okay, before we let you go, what is the downside, you think? Can we unwind all of the last 3 days, or what do you think?
Probably. I mean, if you look at
As in,
fundamental,
like, why not?
Well, what has changed fundamentally today versus a week ago, realistically, versus 3 months ago? Nothing, really. And that's been the whole argument when we saw the big rally, both stocks up more than 70% on Monday, all on the back of the Roaring Kitty post on Sunday evening, is that really was just kind of like the match to get people back out and trading this. It didn't actually change things. And one of the things that I think is worth pointing out is the difference between now and 2021 is people were buying stocks for the first time in 2021. The stock had already jumped, 500% before a lot of retail investors downloaded Robinhood, found out how to fund it and buy call options. People have been holding these stocks for a long time and are sitting on massive losses that if you see it go from 16 to 50 and I got in at 45, I might as well at least have some kind of gain as opposed to waiting around forever.
All right, good stuff. Bailey Lipschultz, equities reporter, Bloomberg News, joining us here in our Bloomberg Interactive Brokers studio. You mentioned what kind of salt do you like?
Oh, truffle.
Have you ever gone truffle hunting?
No.
I've gone truffle hunting in the south of France. How about
With
that?
with a pig or a
Drop
dog?
the
Or?
mic.
They usually do pigs, but the smart ones use dogs because the pigs will sometimes eat the truffle. The dogs, you can train them not to eat the truffle. So they sniff around underground.
Oh my gosh.
They start digging. You pull the dog away, and then you dig them out. They're right under the surface. Thank you to Keith Grossman, our former head of ad sales at Bloomberg, who had arranged these lovely outings 2 summers in a row. A complete crazy bacchanal in south of France. It was great.
And then do you like take the truffle? You can't take the truffles home, like to the U.S., but you like.
I don't know.
them
I hate
then in
truffles.
the-
I'm not in truffles. So everything they have truffles. Yeah. Then they have this little store and this little farm. I'm still on the mailing list, and they have a nice little French people, young couple. And they have a little French truffle thing going on.
I love this for me.
It's another trip.
A little rosé with that.
Oh my
To die
gosh.
for it in this, in May or
Sold
June.
me.
So that's next on the docket?
I love all of this. I'm going to ruminate on this. This is Bloomberg.
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that I start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
My general advice is continue to seek out companies or people that are maybe one stage or two stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down the path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to like build a path towards that. It's almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there, and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
And take the bookings at a fraction of the price of the usual UberX rideshare service. In addition to offering shuttle services at airports, they're going to provide them at Live Nation entertainment concert venues in the summer. Also at Miami's Hard Rock Stadium, where Taylor Swift will perform later this fall. Speaking of which, where in the world is Taylor? Congress wants to ensure private jets have a way to help stay hidden from the curious public. Language tucked away into the sweeping aviation legislation would require the FAA to establish a process for private jets to request to hide their plane's identity. Right now, there are various apps.
Flight Radar 24.
Yeah, and a few other things. So, and we also use it to track some CEO aircraft. Maybe they're putting a deal together over the weekend. That's your company news.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
This is Bloomberg Intelligence. I'm Alex Steele alongside Paul Sweeney and John Tucker. You're listening to Bloomberg Intelligence Radio. We bring you all the top news in economics and finance. We do it through our Bloomberg Intelligence analyst lens. They cover 2,000 companies in 130 industries all around the world. We also keep you updated on world and national news. And for that, we go to Michael Barr. Michael?
Thank you very much, Alex, Paul, John. President Joe Biden and former President Donald Trump look to square off in a debate on June 27th on CNN. Biden has stipulated that the proposed two debates, with the other in September hosted by ABC, take place before early voting begins. Political analyst Larry Sabato, director in Center for Politics at the University of Virginia, likes one of the conditions Biden is proposing.
Cutting off the microphones is a good idea. In fact, to be honest, I've advocated that for years, long before Donald Trump came on the scene, because some candidates are just much more assertive than others, and will gladly take any time they can steal from the other candidate. And the champion of that for all time has been Donald Trump, and the numbers show it.
The nonpartisan commission that has organized debates for more than 3 decades will not be involved. President Joe Biden marks the 70th anniversary of the landmark Supreme Court decision in Brown versus Board of Education. The decision ruled state laws establishing racial segregation in public schools are unconstitutional. The White House has plans all week to mark one of the more pivotal moments in the civil rights movement. Attorney General Merrick Garland.
A promise that this would be a nation where students of all races and backgrounds could learn together in the same classrooms.
Tomorrow, President Biden will meet the plaintiffs from the Brown v. Board of Education case at the White House. As Russian forces renew their offensive in Ukraine, U.S. officials say help is on the way. Secretary of State Antony Blinken making an announcement today during a media availability with his Ukrainian counterpart that the U.S. will set up a $2 billion fund for weapons.
So this will assist Ukraine in acquiring those weapons. Two is to focus as well on something that Dmytro just talked about, investing in Ukraine's defense industrial base.
Meanwhile, Ukrainian President Zelensky canceled all of his foreign trips over the coming days as his commander-in-chief visited Kharkiv. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, Alex, John.
All right, Michael Barr, thank you very much. So here's a fun one from Catherine Doherty on Bloomberg News, and she's saying that baby boomers apparently are loving the freedom of renter life. And this is according to Bank of America. About 80% of renters in the baby boomer generation, who are now 57 to 75 years old, say that they'd rather do that than buy a home in the current environment. That's up from 63% a year ago. They also like not having to deal with all the property maintenance and repair work, which makes a lot of sense, especially when you get older, right? Because then that's an unexplained cost. You weren't prepped for it. You're living on a finite amount of money.
Yep. And I recently sold my real estate at the peak of the market. Thank you, COVID.
Nice job.
And, bought a townhouse down the shore. I mean, it's literally, you lock the door, you walk out, it's great. None of this craziness that John Tucker's doing, working on his house and doing
On the way home, I'm stopping to pick up 2 windows that just came
that?
Yeah, but you like that. That's
I
different.
do, actually. It's just like, I need to keep busy and physically. This is so ephemeral, what we do. I need to see something that I build or accomplish.
And now you understand shopping. So it's just the same kind of thing.
And what you hear from real estate agents is, people are not selling their houses for a variety of reasons, because of the interest rates in large part. But so if you're a young couple, if you don't buy new construction, I don't know where you go.
I don't know where you go either. Yeah. But the difference is that they don't want to be renting. They want to buy. They want to start wealth building, right? These baby boomers are like, I'm more than happy, even though rent has gone up, I'm more than happy to just hang out and rent and not have to worry about my heat pump or my windows and all that kind of stuff.
So I'm all in on that, baby.
I'm not sold on that either.
I like mowing my grass.
Yeah, but you own the place, right? Like you own your townhouse.
Yeah, but you don't have to do anything. It's just kind of all done for you.
Right, but if the roof caves in, you have to do
they're putting the new roof on starting next week.
Oh, okay.
Yes.
Have you been invited down
No,
yet?
I have not.
I haven't done it.
Me neither.
It's a high bar, guys. I mean,
that's fair enough. That's fair enough. Tom, keep going. This is what I heard. Balance of Power is up next with Joe Matthew.
politics to the world of business. This is Balance of Power. Live from Washington, D.C.
Inflation falls short of estimates. Joe Biden and Donald Trump agree to debate. The Maryland Senate race is set. And Speaker Mike Johnson puts lawmakers on the record on Israel today. We've got a lot to talk about on the fastest show in politics. Thanks for joining us on Bloomberg Radio. We'll be joined this hour by Bankrate's Mark Hamrick on the data. Michael Allen from Beacon Global Strategies on that vote today. Geopolitics, Israel and Ukraine. Zach Cohen from Bloomberg Government joins us with primary results. And we'll have analysis on all these stories from our panel. Bloomberg Politics contributor, Republican strategist Rick Davis today, joined by Brad Howard, Democratic strategist from Corcoran Street Group. We'll put it all together after we update Wall Street. Let's get to the markets. First, as always, in New York, here's Charlie Pell.
Thank you very much, Joe Matthew. CPI Wednesday. Stocks just about the best level of the day. S&P 500 topping its previous closing record with the consumer price index cooling for the first time in 6 months. Here's where we stand. S&P now at 52.88, up 41, a gain of 0.8%. Dow Industrials up 230, now up 0.6. NASDAQ up 154, up 0.9%. 10-year 4.36% with a 2-year 4.75%. Bitcoin up 5.2%, 64,808 on Bitcoin. Spot gold up 0.9%. West Texas Intermediate crude up 0.4, 78.30 for a barrel of WTI. So stocks up, bond yields slumping as a slowdown inflation reinforces bets that the Fed will be able to start cutting rates as early as September. David Kelly is Chief Global Strategist at JP Morgan Asset Management.
We didn't get an upside surprise. So we've now had 3 reports. We've had the jobs report, then we had the consumer sentiment report, and now we've had the retail sales report. And they're all saying, overall things are moderating here. When you look at the JOLTS number, things are moderating. We've got fewer job openings. So it looks like the economy is just easing itself into sort of a 2% corridor of 2% growth, inflation gradually coming down towards 2%. And that's very good news.
David Kelly of JP Morgan Asset Management. Meme stocks pulling back today big time. GameStop down now by 28.5%. AMC Entertainment lower by 20.1%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you, sir. Welcome to the Wednesday edition of Balance of Power, live from Washington here on Bloomberg Radio, on the satellite, and on YouTube, where we always invite you to join us here in the studio. Search Bloomberg Global News. When you get to YouTube, you'll find our live stream, and we'll have a seat for you. Painting out of 4 buckets today. There's a lot going on around here. Presidential debates, primary results, an Israel vote in the House today, and, of course, CPI Day. We're going to knock down all of these stories with some of the smartest minds in politics and economics over the next hour. And glad you're with us as we begin with data this morning at 8:30. Suddenly everyone feeling pretty good about things as I read the headline on the terminal. U.S. inflation ebbs for first time in 6 months in relief for Fed. This is the headline that so many have been hoping for. But let's look under the hood, because the headline does not always tell the whole story. Mark Hamrick joins us now. Bankrate Washington Bureau Chief with his take on this. Mark, it's good to have you back. Is the euphoria justified?
It's good to be with you, Joe. I think David Kelly summed that up well in the earlier soundbite, in the sense that we did not suffer another negative surprise here. And so just to have things show up essentially in line with expectations feels like a moral victory. But as we sort of think about this battle against inflation, the battle continues, and we cannot say that victory is declared, but you'll take the wins when you can get them. And of course, if we're thinking about the prospect of a rate hike around September, there's a heck of a lot of things that need to happen between now and then, including statistical data releases.
Yeah. Now, you meant hike or cut, because people have been talking about both, Mark.
Well, Chairman Powell is not talking about a rate hike, and so I think we probably need to follow his lead on that unless we get some truly remarkable surprise. And so we're talking about a rate cut. And, I think that as we've either been part of these discussions, Joe, or listened to them more broadly, I think part of this is trying to keep some things in perspective. And part of that also is to acknowledge high degrees of uncertainty between then and now. The world can change quickly. The other part is that higher for longer, which is sort of the baseline expectation for interest rates these days, can persist beyond the first rate cut. So what is the destination? And we'll have a better idea about that, as we move along that journey as well. Another way of saying that compared to what happened before the pandemic, it's probably a good expectation. In other words, a smart expectation or assumption to say that rates will remain elevated for the foreseeable future, but just not as high as they have been or are right now.
Spending time with Mark Hamrick at Bankrate, we're going to have to start seeing 0.2, right? Maybe 1/10. We got to start getting down to lower numbers here before we can have a real conversation about rate cuts, right? We're celebrating 0.3 instead of 0.4, but these need to start going lower.
They do, if only to sort of meet the Federal Reserve's expectations for its preferred inflation gauge, personal consumption expenditures and core. And so could that happen? Sure. I think that, as was mentioned earlier, as we see consumer spending moderate, as we see consumers saying no to a lot of prospective purchases, trading down where they are accepting the terms of those purchases, and in the marketplace, perhaps setting prices at lower levels. I think we're seeing some weakness now in automobile sales, which are showing up on dealer lots. They have essentially a couple of ways to respond to that, including price. Affordability is really, the other watchword of our day, because we talk about inflation being this dynamic that's been present for more than 2 years in a significant way. But affordability, or lack thereof, is really the end result of that. And that's the thing that so many people are struggling against.
Really interesting to hear some of the anecdotal evidence as well from earnings reporting season, Mark. And I know this doesn't qualify as data for someone like yourself, but when you hear Starbucks talking about people trading down or not buying that expensive cup of coffee the way they were a couple of months ago, when you hear McDonald's in that same reporting season say the same thing, they're trying to work on a $5 value meal to keep people coming into the restaurant. How do you add that to the composite of data that's going to prompt the Fed one way or the other?
Well, it's color, right? And I think, these are data points. They're not government, statistical data, but they are data points. And I literally did write down that $5 meal thing on my sort of omnibus notepad this morning, because I think that's sort of how this is presenting itself. If you can't get people to pay, let's say, $9 per meal at a McDonald's, then you have to adjust because ultimately, unless we're on the road, these are discretionary purchases, right? In other words, you do not have to go get that $4.25 cup of coffee that you can make at home for significantly less than that. And that's where it becomes almost a luxury. And I think that's where consumers are drawing their own lines on that. I've done it in the past several days myself, where we had Mother's Day last weekend. I opted against the beef to put on the grill, went for the chicken instead. And, I was more satisfied with the latter purchase than I would have been with the former.
I get that. I don't know. Next year, maybe take mom for the $5 value meal. I think that's...
We'll see how that goes over.
Yeah. It's good to have you back. Mark Hamrick with his instant read on CPI, the Bankrate Washington Bureau Chief, with us here on Balance of Power. We'll hit this data as we work through the program, if only in our market checks. This is going over real well on Wall Street, and Charlie Pellet will breathe some life into that for us a little bit later on. As I mentioned, 4 buckets we're painting out of today. We just went through one with CPI. The other is a looming vote today in the House on a piece of legislation, a resolution that will essentially call everyone on the carpet when it comes to our policy in Israel. This follows, of course, you remember, we had a lot of talk about this last week, Joe Biden's decision to withhold some weapons shipments from Israel. That prompted the Speaker of the House and Republican leadership to bring this resolution to the floor to compel the president to continue supporting Israel. And the whipping right now is looking interesting. We're hearing that as many as 30 or 40 Democrats could break away from the White House to vote for this resolution. Everybody's trying to cover themselves here in an election cycle. So we talk about the policy in Israel. There's also big news coming out of Ukraine, and that's why we wanted to spend some time with Michael Allen, who's just made his way across town from Beacon Global Strategies. It's great to see you, sir. Welcome back to Bloomberg. You, of course, former special assistant to the president, former senior director, counterproliferation strategy, National Security Council. Your experience is important to us here. Let's start with Israel right now, because I'm having a hard time telling what's going on. Last week, we're telling everybody about these 2,000-pound bombs that the president was withholding. But the headline this morning is he's working up a new billion-dollar weapons package, even as this vote takes place, to essentially condemn his decision last week. How do you rationalize all of these at once?
So it's very confusing. I mean, it even goes back farther. We just appropriated another $14 billion to go to Israel, and we say act in your own self-defense, but yet we're saying with the other hand, we're going to deny you some arms. It's especially confusing this week, though. I think the real answer is a boring bureaucratic answer, that some of these things have been in the pipeline. And there are multiple times for Congress and the administration to sort of say these things are ready to go. But it must infuriate them from a strategic messaging standpoint, because it looks like they're trying to, on the one hand, limit what Bibi's doing in Rafah by saying no more offensive weapons, while reassuring everyone, well, there's more long-term stuff on the way. So it's really confusing, and I wouldn't blame anybody for trying to say, what is the Biden policy?
Well, I'll tell you, interesting insights from General David Petraeus, retired general, back from the Qatar Economic Forum, where he sat down with our editor-in-chief, John Micklethwaite, to talk about what it is to go after Hamas, remembering, of course, his experience in the Middle East fighting the Taliban. Here's what he told Bloomberg earlier today. Let's listen.
You have to clear and hold and keep the enemy out of the people. And I do believe, by the way, that Hamas is the equivalent of the Islamic State. This is an irreconcilable extremist group that I believe does need to be destroyed. But how you do that matters a great deal. And I would welcome seeing a commitment that we are going to make your lives better, civilians in Gaza.
Michael, I'd love your take on that. Do you see Hamas as the equivalent of the Islamic State? Is Israel essentially fighting ISIS? Does that go for Hezbollah to the north as well?
I think I do agree with him, and I agree that both Hezbollah and Hamas are rejectionist groups. They're irreconcilable. There's no way to bring them over into a more moderate camp, if you will. I was in Israel last week. The issues are just as you think. Netanyahu cannot say anything about a post-Gaza situation because he would lose the right wing of his governing coalition in the Knesset. So he is restrained in saying things like he's saying today of, oh, well, I can't talk about this until the whole thing is over. But yeah, I think even though the Israeli society is racked with concerns about the hostages, they generally agree we need to destroy Hamas, at the very least, the 4 battalions who are in the Rafah area, and then we can begin to see our way through the end of this phase of the war.
You were there last week.
Yeah.
How did people react when they were talking with somebody fresh out of Washington here? Did you get an earful on this? Did they want to talk to you about the protests in America? What was the conversation?
They were very concerned. They're very concerned about the growth and explosion, frankly, of anti-Semitism. They are, though, trying to plead with us and say, after September 11th, you wouldn't have agreed to anyone trying to restrict your freedom of action. Why is Biden trying to do this to us? The thing I think, though, that is the most concerning for them is the idea that over time we would cut them off from arms and assistance. On the one hand, they want to say, listen, we're going to do this ourselves. But on the other hand, Netanyahu cannot sacrifice, in the end, his relationship with the United States. That is the greatest asset, arguably, that Israel has, at least national security-wise. So we may not be able to talk him out of going into Rafah, but if he's thinking about going into Hezbollah before the election, I really don't think the relationship with Israel and the United States will survive that.
That's saying a lot, because a lot of people think that's about to happen.
Yeah.
I need to ask you, Michael, about Ukraine. Troubling, if you're concerned about the future of Ukraine, troubling reporting in the New York Times today that would suggest we are at an inflection point that could be the turn upon which Ukraine really starts losing this battle. 18 months ago, White House and Pentagon officials, as we're reminded, were debating whether Russia was about to collapse. Russia is making a serious move right now. Ukraine is asking for weapons, a Patriot battery for Kharkiv, where Russia is making quite a bit of headway here. But to see the side effect of a months-long debate actually show itself on the battlefield like this is troubling a lot of U.S. officials. What's the real situation on the ground?
It's alarming. The Ukrainians are losing villages. The Russians are exploiting what their strengths are, which are manpower and industrial might, and throwing everything they can at the Ukrainians now. With the Ukrainians got a morale boost out of the fact that on April 20th we did the Ukrainian aid, but not all of that, not even a small portion of that has come online yet. So I don't know that they're enjoying the benefits of what they might in another month or two. But they're trying to hold on. The Battle of Kharkiv, as you mentioned, has begun. I think the Russians don't have enough troops. They don't have it sized correctly to take the entire city. But it's touch and go, and things are going to get worse before they get better for Ukraine.
Well, okay. But that also would suggest there's time for Ukraine to turn this around.
Yes. Because Russia, at the end of the day, still doesn't have the right strategy or the right leadership, I think, to do a sustained breakthrough in Ukraine. They may win villages. They may make some progress here and there. It is going to be alarming and seem alarming. But for them to break through, for example, like the Ukrainians did when they took Kharkiv or Kherson in 2022, I don't think you're going to see anything that dramatic, but wow, that would cause a panic.
Well, your perspective is important here, because I'm hearing too little too late.
Yeah.
You don't agree with that?
I think it came just in time, but barely. I mean, the hard part, of course, is getting all this stuff over there and getting it online. There are obviously munitions, backlogs, and all sorts of other things.
With a lot more to deliver.
I think they'll hold on, but it's going to be touch and go.
And a lot more to manufacture as well in that $60 billion tranche. Michael, it's great to see you. Michael Allen from Beacon Global Strategies, helping us walk through the news today on the geopolitical front. We'll have a lot more on primary night results coming up next. 4 buckets today. We've only done 2 on Bloomberg.
on Wall Street. We do check markets all day long here at Bloomberg. Bloomberg Radio brought to you by Boston Consulting Group with their deep industry and functional expertise. BCG is bringing together advanced technology and ambitious entrepreneurship to help organizations unlock innovation at scale. Stocks trading very close to session highs right now, with the S&P 500 index in striking distance of 5,300. Right now, the S&P is at 5289, up 0.8%. Dow Industrials up 220, up 0.6%. NASDAQ will likely see another record there, up 158 points, up now by 1%. Traders sending stocks up and bond yields slumping as a slowdown in inflation reinforces bets that the Federal Reserve will be able to start cutting rates as early as September. Retail sales stalled in April, and the weakness was across sectors from online sales to auto dealers. It could be a function of mounting household debt, which reached a record during the first quarter. Among retail stocks today, we do have shares of Macy's lower by 1.8%, Target down now by 0.2%, Amazon shares lower by 1.1%. Walmart, by the way, reports tomorrow. Recapping, stocks higher, S&P up 42, up 0.8%, with a 10-year at 4.35%. Balance of Power continues now. Back we go to Washington. Once again, your host, here's Joe Matthew.
All right, Charlie. Thank you. Charlie Pellet watching the markets for us every day here on the fastest show in politics. We're glad you came along. I'm Joe Matthew in Washington. This is Balance of Power on Bloomberg Radio, on the satellite, and on YouTube. As Republicans smell victory in the Senate this morning after a primary night that sets us up, at least in the case of Maryland, for a knockdown, drag-out fight, might be, in fact, the race that decides who controls the upper chamber, as we now know who's going to be running against Larry Hogan. Angela, also Brooks, remember that name, will be the Democrat running against the former Republican governor. And she won the primary by a lot. This is amazing. There was, of course, a member of Congress, well, he still is, named David Trone, if you haven't been following this race. He's a really wealthy man because he founded the Total Wine chain, right? This is wine and cigar money, kids. And he spent $60 million of it in the primary to lose by 10 points. So there are a couple of different storylines here, including what role money is playing in politics right now. Elsewhere in Maryland, by the way, someone else you probably heard of, Harry Dunn, the Capitol Police officer, closely associated with the events of January 6th. He raised Senate-level money for a congressional race and lost the primary. Elfreth, as we told you, as many expected, State Senator Sarah Elfreth defeating Harry Dunn. Now, there's more at stake here, at play, I guess, after primary night. We had West Virginia, no surprises there, Nebraska. Let's get into this with Zach Cohen, reporting for Bloomberg Government, his eyes on the campaign trail. Zach, it's good to see you. Republicans have chosen Senate nominees now in Maryland and West Virginia that they think can change the game here, that can both win. West Virginia is one thing, Jim Justice basically uncontested, but talk to me about Maryland. Can Angela Also Brooks beat Larry Hogan?
Oh, certainly, I think probably has actually the advantage over Hogan, especially in Maryland, where President Biden won that state by 33 points in 2020 and will be on the ballot again in 2024. And leading that ticket, that would obviously also include Also Brooks and a number of down ballot candidates for the House and whatnot. So West Virginia, as you mentioned, chose Jim Justice, the current governor of West Virginia, one of the wealthiest men in the state. His family runs an extensive coal and agricultural holdings company in West Virginia, and that seat alone, he'll likely flip Joe Manchin's seat and give Republicans 50 seats in the Senate at a minimum. And they only need one more in order to gain a majority, or the White House if they had the vice president to tie it. So that's where Maryland becomes super interesting, where Angela Also Brooks will be the Democratic nominee against Larry Hogan, who remains very popular in the deep blue state of Maryland, despite the fact that he was a Republican governor for 2 terms.
Well, that's amazing. And we keep hearing if any Republican could do this, it's Larry Hogan. When he jumped into the race, it changed everybody's view on things here. But how did Angela Also Brooks do it? Is this a don't mess with Steny Hoyer kind of story? Because not only did she win, she beat Trone with a $60 million ad spend here, or campaign spend, by 10 points. What was the secret?
And I want to put that in perspective. David Trone spent more money on his own Senate campaign than any Democratic candidate for Congress in at least the last 24 years, probably ever. And so this was a massive amount of spending. You couldn't open a mailbox or watch TV in Maryland without seeing David Trone's name and face. Angela Alsobrooks, however, had the support of the incumbent governor, Senator Chris Van Hollen, Congressman Jamie Raskin. In fact, every Democrat in the Maryland delegation, other than David Trone, endorsed Angela Alsobrooks' campaign for Senate. And I think that really resonated with voters. There's something to be said for saturation or oversaturation. At some point, after spending, I think he ultimately $48 million on TV, radio, digital ads. Maryland voters know who David Trone is. That wasn't really the issue. The question was when they looked side by side between him and Alsobrooks, who is the executive, runs the second most populous county in the state. They ultimately obviously went with Alsobrooks, who we should note would be only the fourth Black woman to ever serve in the Senate and would be the first Black person to ever represent Maryland in the Senate. And so her candidacy is pretty historic, and I think probably is part of the reason why she was able to beat Trone in this primary, where for months he was seen as the favorite.
Well, she'll have quite a story to tell. My partner here, Zach Cayley Lines, shared a tweet with me that David Trone just spent approximately 5,922,000 bottles worth of Josh to lose a not particularly close Senate primary. Kirk Battle with the tweet there. It is going to be a case study in how to spend money, right? Because if money's the mother's milk of politics here, people aren't too thirsty for milk, it seems.
I think some of this also speaks to the fact that TV advertising probably isn't as potent of a force. Certainly people still tune in on cable and broadcast television, but given the fracturing of the media market that we're all very aware of, people just aren't watching traditional TV, which is the most expensive form of advertising, as people usually are. They're online. If they get mail, it's usually junk and they throw it out. It's just much harder to reach voters nowadays. Earned media, talking to the press is certainly one way to get the message out. There was one debate between the two candidates that I'm sure people tuned in for, but I think what we've seen in both David Trone and also in Harry Dunn's race that you mentioned in central Maryland, in both of those cases, money was not the dispositive factor at the end of the day. Ultimately, people chose candidates for very different reasons, I think, in both of those races, but ultimately went a different direction.
As we spent time with Zach Cohen from Bloomberg Government, there were presidential primaries as well. Nobody's talking about them because we know how this is going to end at the conventions. But Zach, Nikki Haley got 20% in Maryland. I know it's Maryland, but Republican primary, she got 18% in Nebraska. She got 9% in West Virginia. How do you qualify this protest vote on the Republican side?
And we should talk a little bit about Nebraska, where both of its senators actually won re-nomination, or at least in Pete Ricketts' case, his first nomination after being appointed to the job when Ben Sass left to run a university in Florida. Despite the fact that both Pete Ricketts and Deb Fischer actually were not endorsed even by the state party. No incumbents in Nebraska in that delegation. Don Bacon, for instance, did not have the support of the state party, as the sort of more moderate wing of the party there is on the wane compared to the party activists in the state that are looking for somebody else to take on that mantle. Look, as for Nikki Haley, I think some of this are certainly protest votes. I don't think that Republican primary voters are under the illusion that Nikki Haley will be the nominee. I think Trump has basically sewn this thing up at this point and will be nominated to the presidency in Milwaukee this summer. But it is a good indication that there's a sizable chunk of the electorate that still wants to see a difference in the party. And I think Larry Hogan's performance in this primary is another example of that. This is somebody who has not been a fan of Trump for a long time, but on the same primary ballot as Trump, Hogan won by a pretty sizable margin. I think the last one I saw was with at least 3/4 of the vote, and that was after being outspent by his challenger, who was running as a Trump conservative. And so there's certainly a part of the Republican Party that's not comfortable with Trump continuing to be the leader of this party.
Well, I guess we shouldn't be surprised to see that number 20% in Maryland. Producer James reminds us that Larry Hogan is the ultimate never Trumper. So if a number like that were going to hit, then again, though, Zach, we saw 22%, I think, in Indiana. So it's worth following these results as we make our way to Milwaukee, isn't it?
It could give the Haley delegates some negotiation if they don't want to nominate Trump by acclamation, for instance, which is typically how this is done. If they sort of force the roll call vote and maybe try to get some concessions on the platform, for instance, or some direction at the party. The Republicans are going to have to decide this summer, how much control to give Trump over the Republican Party going into November. I will say also some of this might have been sort of early banked mail-in votes that may have been submitted before Haley dropped out. I should probably check the timeline on that. And so that might confuse some of the analysis here. But for sure, some of these protest votes, I think both for Trump and for Biden, there was an undeclared option on the ballot in Maryland. You could certainly see some pressure to move the presidential nominee one way or the other from these delegates who will be going to these conventions and will have a seat at the table when deciding the platform, when deciding the vice presidential pick, and a host of other important decisions that will be made by the national parties at these meetings this summer.
Well, you should find his reporting on the terminal and online. Zach Cohen writing it up for Bloomberg Government. Costly Maryland Senate contest ahead with history-making chance. Great reporting, Zach Cohen. You got a lot of fans around here, so stay close to us through this campaign cycle. He does a great job for us here on Balance of Power. We've got a lot more coming up, including our panel reacting to a lot of important news today, including one thing we haven't gotten to yet. We've done 3 of 4 buckets, as I told you. Number 4 is debates. Joe Biden and Donald Trump, since the start of this day, have agreed to debate. We've got 2, it looks like, on the books here. It's not the ones you thought. We'll talk about it next after we check world and national news with Amy Morris in the Bloomberg 99.1 newsroom in Washington. Hi, Amy.
Hi, Joe. Slovakia's populist prime minister, Robert Fico, is in life-threatening condition after being wounded in a shooting today. His office says he was shot multiple times and was transported to a hospital by helicopter. Now, local news reports indicate Fico was hit in the stomach after 4 shots were fired outside the House of Culture in the town of Hanlova, where he was meeting with his supporters. Condemnations of political violence now coming from leaders across Europe, including from Fico's political rivals. President Biden has challenged Donald Trump to a debate, and Donald Trump has accepted. So now there will be 2 debates, one in June and the other in September. Biden says he's accepted the invitation from CNN to a June 27th debate. Trump has agreed to the time frame, but did not say whether he would consent to the other proposed rules. President Biden wants no crowds. Trump wants to have a big crowd on hand. They've also agreed to a debate in September with ABC. The Biden administration, meanwhile, informed Congress of a $1 billion weapons transfer to Israel. That's after President Biden paused a bomb shipment last week to head off a full-scale attack on Rafah, where the fighting continues with Hamas. Retired General David Petraeus did speak with us earlier to talk about how Israel should be shifting tactics. He talked with Bloomberg News editor-in-chief John Micklethwaite at the Qatar Economic Forum in Doha. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
on Wall Street. We do check markets all day long here at Bloomberg. S&P 500 closing in on 5,300 in a CPI-fueled advance. S&P right now at 52.92. It is up 46 points, up 0.9%. Dow Industrials up 252, up 0.6, while NASDAQ up now by 176, a gain of 1.1%. 10-year, 4.34%, with a 2-year, 4.73%. Bitcoin right now up 5.5%. Spot gold up 1.1%, 23.83 the ounce, and West Texas Intermediate crude up 0.1%, 78.14 a barrel. There is a dose of positive news on U.S. inflation, and yes, they are cheering it on Wall Street. That story from Bloomberg's Vinny Del Giudice.
Core consumer prices moderated for the first time in 6 months in April, rising just 0.3%. That's a very small step in the right direction for Federal Reserve officials looking to cut U.S. interest rates sometime this year. They'll need more evidence, though. Bloomberg Economics sees signs of hope in data on housing expenses, easing rental costs. It's a trend that could be poised to continue. Vinny Del Giudice, Bloomberg Radio.
GameStop shares are retreating after 2 days of monster gains. Right now, we've got GameStop down 31%. AMC Entertainment down by 22.8%. After the bell today, we hear from Cisco Systems. Cisco up now by 1.1%. Recapping, stocks higher, a CPI-fueled rally with the S&P up by 0.9%. Balance of Power continues now, and back we go to Washington. Once again, your host, here's Joe Matthew.
All right, Charlie Pellet, we thank you, sir. We'll be back to Charlie in a bit. Check on trading today. Everybody's feeling pretty good about the CPI. As Charlie just mentioned, Molly Smith from Bloomberg News will be with us at the top of our next hour here, hour 2, to distill the data with a couple of big stories we're following here today, including one we didn't see coming, debates. A couple weeks ago on this program, everyone was doubting the idea that debates would happen at all between Joe Biden and Donald Trump. God knows Donald Trump hasn't attended a debate yet in this campaign cycle. But early this morning, Joe Biden goes for it. He jumps on Twitter with a video. I've received and accepted an invitation from CNN, he says, to debate on June 27th. Over to you, Donald, as you said, anywhere, anytime, any place. And he's got this sort of challenging video in which he says, "Make my day, pal." Trump and Biden have now agreed. Donald Trump accepting the CNN debate now, June 27. And there's another ABC debate in September that they've agreed to. Stephanie Lai from our politics team is covering this for the terminal and online here at Bloomberg. Stephanie, it's great to see you. Thanks for coming back. This happened quickly, and it did not happen with the Commission on Presidential Debates. What's happening here?
Yeah, well, I mean, both contenders have had their own issues with the commission, so it's not surprising that they've decided to take matters into their own hands and schedule their own debates. Yeah.
Those issues included moderators, formats, a lot of the things that we've come to take for granted in presidential debates. What would these look like?
These new ones?
That they've now agreed to, yeah.
Yeah, so what we know right now is from CNN, they're going to host it in a studio in Atlanta. Okay. There will not be an audience.
No studio audience.
No
so
studio.
There's no clapping, no heckling.
No. And that's something that Donald Trump was really looking forward to. He seems to thrive off of the energy of the crowd and was thinking that having this live audience would help his debate performance. And in addition, they've agreed to allow the moderator to cut off the microphone if they speak over each other.
This is something I like.
Yeah.
I was just going to ask you about this. Do we really believe that that's going to be in the final set of rules here? Because if that's the case, they're both getting cut off on every answer, right?
well, time will tell. But that is certainly something that we should expect.
ABC, similar TV studio, no crowd. That's going to be the deal for both of these?
ABC hasn't released their information yet, so we don't quite know. But we do know that the date is scheduled for September 10th.
Right. Now, the calendar was important to Joe Biden, at least as he illustrated in his video today, because of early voting. That prompted earlier debates. The idea, though, of doing this in June, who's going to remember what they said in November?
Right, and I think part of that is because this is the longest general election in modern history, and they sort of need some sort of news event to really propel their message and to continue getting voters on their side. And the original debates that were scheduled were not set until September, October. And of course, as we know, both Trump and Biden took issue with the fact that a lot of states already allow early voting by the point in which these debates would have happened.
Right. Got it. Stephanie, thank you. Stephanie Lai here at Bloomberg Politics. I'm Joe Matthew in Washington. We got to hear from the panel on this. This really unfolded since we all woke up this morning. Actually, you can see Donald Trump's post on Truth Social, the post of Donald Trump accepting the debate invite, a dense piece of text. I'll be there. Let's get ready to rumble. The only part you really need to know. Rick Davis is with us now, Bloomberg Politics contributor, Republican strategist, joined today by Brad Howard, Democratic strategist, founder of the Corcoran Street Group. It's great to have both of you with us here. Rick, let's get going. We talked about this last, the two of us, the idea of the commission maybe not having the final solution here, and it looks like the commission's out of business. Are these debates really going to happen?
Yeah, the RNC said a while back they're not going to participate with the commission debates, and we've known for a long time that they've had a troubled relationship with both the Biden camp and the Trump camp. So this makes it official, and I think it's really interesting because if you'd asked me yesterday, I'd say highly unlikely that these two guys are actually going to get on the stage together. But these are conditions I think that are actually great. I mean, like I don't think studio audiences at debates are productive. I think they take away from what the viewers are trying to get. And so doing it in a studio at CNN down in Atlanta, a targeted state, not a bad selection. Thank God we're not going to these places that they don't really have the presidential campaign come to for the debates. And it harkens back to the beginning of the debate era where studio debates were the thing that presidential candidates did. And maybe this will be focused more on the two individuals and what they plan to do as president than just playing to a crowd.
I have so many questions, Brad. What's your initial thought, though, in terms of an opportunity for Joe Biden to have a fair conversation? Because there were a lot of Democrats who said, and by the way, Republicans too, including Rick Davis, who said, I wouldn't put my guy in there if Donald Trump's not going to play by the rules. But knowing that a moderator can cut off a mic, knowing there will not be a crowd in the room, makes you happy? What do you think?
Yeah, I mean, let's be clear. It's a good day anytime Joe Biden's quoting Clint Eastwood saying, "Make my day, pal." So I thought that was a pretty good foray into this fight here. Good opening salvo. Look, I mean, the reality is, if you look back to the debates that were in 2020, Donald Trump tanked in the first one. I mean, the polling shows that he fell in a tailspin after the first debate, and he didn't do much better for the second one, and they wound up getting out of the third one altogether, mainly due to COVID and other reasons, but I suspect it was because he's just not a great debater when there are rules. President Trump thrives in a setting where there's audience feedback and hooping and hollering, and that makes for great TV and a great rally. That does not make for a great debate. And so I think forcing these two individuals who have the experience of both being president for 4 years, go toe-to-toe and really debate on the issues and the substance, that is what is a service to the American people. And I am very excited about what is ahead for these four, because this is not a sure bet for President Biden. I mean, like, it depends on which president shows up. If it's the State of the Union president, the Democrats are going to rally. Yeah, but if it's, a kind of timid, low energy president, that these debates could be a problem for him. So we'll see. But I feel good about Joe Biden's ability to show up and deliver.
See, you bought the "Make My Day, Pal" that worked for you, Brad? There were a lot of eye rolls this morning.
My dad is a huge Western fan, so anytime you can go back into the John Wayne or Clint Eastwood days, he's a happy camper.
Come on, punk. Hey, Rick, what does this mean about vice presidential debates? The commission had one set aside, of course. Is Kamala Harris going to get on stage with whomever Donald Trump picks?
Well, just to point out that Donald Trump threw out a line at the end of his statement on the debates by Michael Buffer, which was the announcer of professional wrestling, which is the only sport in America that's not rigged. And that is, let's get ready to rumble. So both candidates are going for that blue-collar fight. I mean, this is going to be great. Yeah. I think they should put this in a steel fence. Put a fence around the two of them, and have them with their podiums inside the cage. And then we start seeing viewership go up for presidential debates.
This just became a cage match.
We're in very odd times because we're actually having debates amongst presidential candidates who are not yet the nominees of their party. I've been around a long time, sadly, And that's never been done before. And so the idea that somehow we're going to be contemplating a vice presidential debate before Trump even picks one is a little bit premature. And so I think that will probably revert to the post-convention traditional September-October timeframe. And frankly, with these two big-time fighters that we're talking about today, nobody's going to care about who the vice president is. They want to see the rumble and steel cage in Atlanta.
Well, I have a slight disagreement.
Producer James is asking appropriately, I think, if there's going to be a weigh-in. But hey, Brad, you gotta hear this. This is new. Donald Trump just posted again on Truth Social since we've been talking. Please let this truth serve to represent, he writes, that I hereby accept debating crooked Joe Biden on Fox News. The date will be Wednesday, October 2nd. The hosts, Brett Baer, Martha McCallum. Thank you, DJT. He signed it himself, Brad. We don't think Joe Biden agreed to that, do we?
I mean, I don't know, but like those are two good journalists on Fox News. You got to give them credit. I mean, Fox News is, of course, more of a conservative bent, but those are two legitimate, serious journalists. I think the president would probably accept it depending on the rules. I think we're headed towards several. We'll just see how this goes. I think they've got to do at least 3. What happens beyond that remains to be seen. But I do think the vice presidential debate is more important than ever when you have 2 nominees, well, presumptive nominees to your point. They're not actually nominees yet. When you have 2 nominees that are over the age of 70, like this, the vice presidential debate does kind of take on a little more elevated importance than in previous debates.
I don't know, Rick. Do you see this coming together? A 3rd debate on Fox, or did we just cross into the comedy portion of the program?
Well, all I can say is I'm just happy we're not talking about Stormy Daniels this afternoon. I mean, wow, this is real news related to a presidential campaign. And I think they should try to have as many as they can. Look, they're going to have ups and downs. As Brad pointed out, Trump has had his bad debates and he's had good debates. So I actually think that if you're going to debate once, you might as well debate 6 times because at least you get the better of the averages. That's why baseball championships go 7 games. And so why not make it just like a baseball championship, and let's just let everybody vote based on that, because nothing else they're going to see is going to make a bit of difference. But I still think the biggest hurdle that the Biden administration has, the Biden campaign, is how do you regulate the untruths that will be pouring out of Donald Trump's mouth? I get all the rules, but that's rules for people who actually attempt to tell the truth. And in Donald Trump's case, we've seen time and time again that media outlets have not been able to correct the record when he goes haywire at a debate or on a town hall. And so I'm more curious than ever to see what the CNN rules are going to be like in Atlanta that say, we're going to correct you if you make a misstatement of fact.
Right.
And then let's see if Donald Trump plans to show up.
Well, never mind. Turn off your microphone. Put Donald Trump on hold for a minute, Brad. Is it appropriate to be shutting off the microphone of the President of the United States while he's speaking? In what world have we ever seen that happen?
Well, I mean, keep in mind, in this environment, he is a candidate, right? Yes, he's the president, but he's also a candidate. So running against a former candidate, and it depends on what you define as the true purpose of the debate. If the true purpose of the debate is to give both sides a chance to showcase and demonstrate their positions on the issues to the American people, and then to rebut the other's statement, then in that case, absolutely, you should be able to shut off the mic if you're, filibustering the microphone, because then it just becomes performative art and it's not really helpful to the American people. So I do think these rules are critical, and I think this is why you saw the hesitation in the Biden world. To be clear, the Trump campaign, Donald Trump is the one that said anytime, anywhere. So, he has to accept, according to his own parameters, he has to accept all these offers that the Biden's putting out, because that was his opening salvo here. So it remains to be seen. But I think the other smart thing Joe Biden did was do the debate so early. I didn't anticipate this. Did it so early in June, possibly when the trial is still going on, or possibly fresh off a guilty verdict. So will Donald Trump's headspace be ready for a debate? We'll see.
The Biden campaign, Rick, is now selling free on Wednesdays T-shirts. I just put that there as an aside. Is this the most shrewd way to make sure RFK Jr. never appears on a stage with these guys, Rick?
Look, I mean, I think everybody agrees that you want to include third-party candidates who can compete for the presidency. If you're not on enough ballots to get 270 electoral votes, you shouldn't be on a debate. I mean, regardless of what your polling is, if you actually cannot qualify to be on enough ballots to get even if you win every single state that you're qualified to be on the ballot of, you have to be able to get to 270, or you're really not a candidate for president. Because being a candidate for president means you have a pathway to win. And if you're not on enough ballots to get to 270, there is no pathway to win. And so I think that organizers have to take a serious look at this. RFK only deserves to be on the ballot if he's a legitimate presidential candidate, and that means he has to show a pathway to win.
Well, this was a great panel, and we're not done either. Rick and Brad are back in hour 2. I love this pairing up, and we've got a lot more to talk about when it comes to debates and ticking through results from primary night. We haven't even cracked the seal on that with our great panel. Kaylee Lyons is on the way in as we approach hour 2 here on Balance of Power. This is Bloomberg.
of business. This is Balance of Power. Live from Washington, D.C.
President Biden and Donald Trump agree on one thing. It's time to debate. Welcome to the fastest show in politics. As we learned today, the two presidential candidates will have their first televised battles since 2020. I'm Joe Matthew alongside Kaylee Lines in Washington. And Kaylee, this unfolded since we woke up this morning. It's looking like the Commission on Presidential Debates is out of business.
Yeah, because they're not going to go with their debate structure. Instead, Joe Biden had a challenge for Donald Trump. Donald Trump quickly accepted, and now we have June 27th will be the first on CNN, then September 10th on ABC. But Donald Trump says, why stop at 2? He's looking for more.
For 3. There will be no studio audience, and the moderators, to be determined, apparently, will also have the opportunity to cut off mics when even the President of the United States talks over time. That's something we've never seen before.
Yeah, assuming all parties will agree to that.
Correct.
Donald Trump didn't seem super in favor of those proposed rules, but certainly one thing's for sure, at least at this time, we can expect to see the two of them together on the stage where a number of topics will be discussed, I'm sure, Joe, including the economy, which is in focus today with CPI data.
You might mention that, yeah. It's driving the markets. I don't know if the euphoria is justified, but people seem to like what they see.
Yeah, President Biden trying to tout inflation down more than 60% from its peak, while Donald Trump, in response to CPI, says Joe Biden's poll numbers continue to sink as prices for the American people continue to rise. Because, yes, while inflation is cooling, prices are still
It's just going up slower, right?
Exactly.
We have to remember this as we talk about 0.3. It's still going up.
Yeah, prices aren't coming down, at least not across the board.
The market, though, is loving what it's seeing, isn't it?
Indeed. Well, maybe we're going to get some rate cuts this year. After all, Charlie Pellet's definitely been monitoring the way markets are reacting to this data and more up in New York. Charlie, how we looking?
Right now, we got to get right to the numbers, Kaylee Lines, and I'll tell you why. Big day for stocks, CPI Wednesday. Right now, we have got the S&P trading at 52.98, closing in on 5,300 in a CPI-fueled advance. Looking at a gain right now of 1% on the S&P. The Dow up 289, now up by 0.7. NASDAQ up 184 for the NASDAQ Composite Index, a gain right now of 1.1%. 10-year at 4.34% with a 2-year now yielding 4.73%. By the way, we'll have more on the CPI report coming up in just a moment. We've got spot gold today advancing by $25 the ounce, up 1.1%. 23.83 on the precious metal. West Texas Intermediate crude up 0.5%, 78.43. Bottom line here, big rally for stocks. We are seeing some air coming out of some of those meme stocks, however. GameStop, case in point, down 31%. AMC Entertainment down now by 34%. We'll throw in Tupperware. It was joining the party, down now by 15%. So again, recapping a big rally for stocks. We're on 5,300 watch on the S&P 500 index. Balance of Power continues. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lines.
All right, Charlie Pellet up in New York on 5,300 watch. Thank you so much. Joe, if we're still in the days of the Trump administration, we might all be getting some hats ready when you hit a nice round number like that. But we know
a lot of tweets, at least.
The current president is much more reluctant to use the stock market as a benchmark of indicators of how the economy is doing.
I wonder if he remains that disciplined all the way to November. Now he's predicting rate cuts.
Yep.
Maybe we're tweeting about the stock market at some point. It depends what Molly Smith reports at 8:30 in the morning once a month. And of course, she gets up awfully early on CPI Day and is with us right now, Bloomberg Economics editor. Live from New York. Molly, it's great to see you here. The headline sounds great. Inflation ebbs, markets rally. But when you look under the hood, what do you see?
Yeah, I mean, a lot of good things to like in there for sure. Charlie said when I came in here today, happy 5,300 day. So could be, like we said, a new high for the S&P today. But there's a lot more to it than just the stock market, which, of course, Joe Biden will tell you is not the economy. So looking under the hood here, I mean, you still had over 70% of the increase, which was 0.3%, as you guys said, month over month. Over 70% of that in the CPI was due to shelter and gasoline. That's not going away. I mean, this is still something that Americans are going to be thinking about now tomorrow and at the polls in November that housing costs are very expensive, and gasoline, obviously a bit more volatile than housing, wherever that's going to end up in the coming months. But right now, that one has really been very painful. So those prices still rising very rapidly, car insurance as well. These are things that people, you're getting bills at, in the month very regularly, or you're seeing these prices every day when you're driving. It's just really hard to, put that out of your mind.
Yep.
Yeah, there's still stickiness out there in pockets, including in shelter and some of those other services areas you were alluding to, Molly. And certainly the stickiness is what the Federal Reserve is worried about. How many prints like this would they need to see in order to actually make the case for rate cuts that the markets seem to think is actually more likely to happen multiple times this year than they did before the print? Or does an actual cooling on the headline level or the core level ultimately matter when you still have sticky stuff underneath? What do they react to?
So remember that the Fed is targeting a different measure of inflation, not the CPI. The one that they care about is the PCE. But of course, the CPI is, basically the single biggest market moving event every month, and it comes out 2 weeks before the PCE. So that's why it garners as much attention as it does. That said, of course, the Fed is still paying attention to the CPI, and they're not going to forget that the first 3 readings this year were really rough, all came in above forecast. You get 1 month that's a welcome step down in that, coming in line with expectations for, the first time this year. Of course, you're going to welcome that, but once is certainly not enough to give you more confidence. I think this is still very much the when we start to hear from Fed speakers a little more after this print, still going to be pushing that higher for longer narrative that, Powell was speaking about yesterday. And also 0.3%. Yeah, it's not 0.4, but it's also not consistent with that 2% annual inflation number that they're really targeting. You need to see numbers more in the 0.1, 0.2 range month over month to really start to feel like inflation is sustainably heading down to 2%.
So what makes you worry the most, particularly about, this turning around? Is it grocery prices? You mentioned gas prices. Molly, we still have 2 hot wars underway that could impact all this.
Yeah, I know. I think, there is some promising signs that shelter is maybe starting to turn. So that is certainly very promising, and would need to see more prints to corroborate that that is in fact happening. I think the one that concerns me the most, and especially from the perspective of being an American consumer, is probably more on the car insurance side. I think that one, is really going to be difficult to swallow. This is up like, over 20% year over year. This is like the fastest price increases since the 1970s. And car insurance is also rising for reasons that, we can't really control. It's just because cars are just more expensive. They're more technologically savvy. They cost more to repair. So it's just going to be reflected in these insurance premiums. And you see that in homeowners insurance premiums as well.
Kaylee, my kid got his driver's license yesterday.
Congrats.
No, I don't think that's in order. I think
well,
I'm
it
ruined.
frees up. Dad's no
For
longer going to have
reasons.
to do all the shuttling back and forth.
That part's true.
Right.
But, now we're going to add a car. We're going to put this person on the insurance. I don't know. Molly's making me nervous.
Yeah, well, it might be a little bit expensive, so good thing you can take the car to the job. But that gets me to the other point we should talk about, Molly, is the Fed is trying to balance a few things, inflation and jobs. If inflation data kind of continues to do what we've seen it doing this month, but we start to see more material deterioration in the labor market, what ultimately is going to win out?
I mean, they've been very clear that the inflation side of the mandate has been the primary focus. But Powell did say after the last Fed meeting that, as inflation has made as much progress as it has, again, we're thinking back to the peak in 2022 when the CPI was at 9%. So looking at something more in the range of 3% is certainly a big drawdown in inflation. So as that progress has happened on the inflation side, he did say, you have to start thinking about the employment side of the mandate a bit more. That said, yeah, of course, the latest jobs report was a bit softer, but when you're talking about payroll gains still in the area of 200,000 and unemployment under 4%, hardly cause for concern there. So I think you would, like he said, a real material, unexpected weakening in the labor market, and that's not just going to be a couple of tenths up in the unemployment rate. So I mean, right. I wouldn't want to spell out what that scenario might look like because it would obviously have to be much worse.
Bloomberg economics editor Molly Smith made the point, Molly, we're celebrating 3/10 here, but what do we need to see? A couple months of 2/10, maybe 1/10, maybe flat. What would actually convince you more than today?
in terms of getting, more on the path to a rate cut this year?
Yep.
Yeah, I think that, look, 0.3, certainly more welcome than 0.4, but if you get a few more string of 0.3% increases, I think that more supports the argument that inflation progress is maybe stalling, more moving sideways than really moderating. You really need to get down in that camp of consistently 0.1, 0.2 increases to make the point that we are really back in a sustainable 2% territory.
All right, Molly Smith, Bloomberg Economics editor, thank you so much for joining us on this CPI day. We appreciate it. And of course, it's not just CPI day. This is also a day where we got news not just on inflation, but on presidential debates. Will be happening between Joe Biden and Donald Trump. The first will be on June 27th in Atlanta, the swing state of Georgia. And that is where we go in our next conversation. I'm pleased to say that joining us here on Balance of Power on Bloomberg Television and Radio is Dr. Bernice King. She's the daughter of Martin Luther King Jr. and the CEO of the King Center, joining us from our Atlanta bureau. Dr. King, thank you so much for being here. We appreciate your time. As we look ahead to what will go down in Atlanta just over a month from now, it comes against a backdrop of polls suggesting, including a New York Times Siena poll just earlier this week, that not only is Donald Trump leading in swing states, including Georgia, 20% of black voters is the tally he's winning right now. That would be the highest for any Republican presidential candidate since the enactment of the Civil Rights Act of 1964. What exactly do you see happening here? Why is support shifting?
Well, I think when people feel like they are not getting their issues heard or represented in a period of time, and there is a shift in the possibility of changing administrations or candidates, people have a tendency to shift parties or shift to other individuals who may be running in the same party. We saw that, as you know, in 2008 with President Obama after President Bush. We saw that when Obama ran again. Some people who did not vote for him the first time voted for him the second time. Or people who did not vote for him, people who voted for President Bush, and this time around when Obama was running, did not vote in the Republican Party. They voted in the Democratic Party because they wanted hope, they wanted change. So I think there are people in the black community who are feeling like not a lot has changed, especially economically in the black community, and I think many of them have been driven by that.
Dr. King, it's great to have you with us, and I appreciate the time that you're giving us today from Atlanta. We were in Atlanta for the Senate runoff that reestablished Raphael Warnock as the senator from Georgia, and I had the opportunity to walk around the King Center, spent time walking past that beautiful reflecting pool, and the people we spoke with that day talked about Joe Biden and Democrats, what they could do to help Georgia. Raphael Warnock, of course, was a big part of that conversation, and we're having a very different conversation at this point now. But you're there. What are you actually hearing from people? Do you believe these polls? Do you believe that Donald Trump is going to secure the black vote in 2024?
I don't know if it's a matter of a belief. I think there are many people concerned that that could be the case. And it's not speculation. I mean, especially black males who seem to be more attracted to Donald Trump and his candidacy. And I think there has to be a plan and a strategy for the Biden administration to really creatively figure out how to reach, especially this next generation who's very disgruntled right now. With the Biden administration. It's not going to be easy, unfortunately, but this probably is the most defining election of my time. You know, I've been here 61 years. I've been, voting for 45, somewhere around there, 44 years. So, it's an important election. And people have to be very thoughtful about how they want to see our nation move forward in the coming years and who is going to best represent that policy-wise. and tone and tenor-wise, because it all goes together. Presidents set a tone in a nation, and that is, to me, just as important as the policy side. As we know, most of the policies are passed by Congress. They're running as well this year. So it has to be very thoughtful in the approach. And I'm not sure many people are being thoughtful at this time. Typically, people are led by, emotion. And we also have to be thoughtful globally. It can't just be about me, because I live collectively in community. It's about my neighbors. So I have to think about it holistically, about who would best represent us holistically as a nation, and also those very fundamental issues that affect the least among us.
Well, as we consider the issues, and knowing that President Biden himself will actually be down in Georgia this weekend giving the commencement address at Morehouse, we have seen a lot of turmoil on college campuses lately. The issue of Israel and the ongoing war in Gaza is definitely one that seems to be shaping this election cycle, and especially given you and your family's legacy of peaceful protests. What do you make of what we have seen on campuses across the country that have not always been peaceful, and in fact, in many instances, have turned violent?
Well, I think in all fairness, it has to be a balanced approach in how we talk about it. As with any protest, any movement, there's going to be people who infiltrate. Happened with my father. The difference, I think, in today's time is because there's not a real strategy that people are organizing around collectively with parameters and criteria. It's very difficult in a world where people can get information instantly to have those kind of regulations, but you have to, because otherwise what becomes a story is what you're saying. My father was able to guard against that. As you know, in Memphis, they had to pull him out right before he was assassinated. Shortly before he was assassinated, he led a protest there, and some people that infiltrated to turn it violent. And he had a track record of nonviolence, and that's important as well as we approach these. So, yes, that is true that there have been some, but I do want to applaud the young people who have not been violent, the ones who have been trying to press the message about what's happening to the Palestinians, and those who are pressing the message about Palestinians and freeing the hostages, because all of this is getting lost, because I think there are people out there who genuinely want a holistic approach to what's happening, and they want something that's humane and the saving of lives, period. And so that's not getting to the surface. And so I do not support the violence because I come from a place of nonviolence, but I do know that there are people out there who do have a posture of trying to do this in a peaceful way. And unfortunately, when people feel like their demands are not being heard, it often happens. That's when Daddy said you get the violence is the language of the unheard. So we have to look at why is this happening as well.
It's an awfully important line right now. Dr. King, Kaylee mentions the speech at Morehouse, the commencement address by President Biden. That's not all we have on the schedule this week. On Thursday, tomorrow, he'll be meeting with plaintiffs from Brown versus the Board of Education case and their families. On Friday, he's speaking at an NAACP event. He will address members of the Little Rock Nine, a campaign event on Saturday in Atlanta, and then Morehouse on Sunday. Dr. King, does being present like this help?
Well, if being present is consistent, yes. It's very difficult if people perceive your presence as being more political. And I think that's what a lot of people who are in elected office face. And that is, where are you in the middle, in the times in between? And I think people are experiencing that. They're showing up now, but what about those other times? Now, I'm not suggesting that that has not been the case with the administration. But if it is the case that you have been consistently present, then the messaging has to improve, and people need to know that you have, and those people who know you've been present need to be the voice saying, let me show you how they've been present. Here are the results. So the campaign can't speak. The people who have benefited from the administration, should I say, need to be speaking. Let me show you how this has impacted my life. This is what I have gotten from the Biden administration. So now is the time for the people who believe in this candidate, who believe in President Biden, because he's a candidate now, unfortunately. He's the president, but yet he's a candidate. So now the people who believe in what he's done as the president need to be speaking for him while he is the candidate and saying this is what he's done for our communities, our group, with these issues.
Only you could make the point in the way that you just did. Dr. King, we're delighted that you could come and talk to us today. Live from Atlanta, Dr. Bernice King, CEO of the King Center. Thank you for joining here on Balance of Power on Bloomberg TV and radio. I'm Joe Matthew alongside Kaylee Lyons. Fascinating conversation, Kaylee, as we spend so much time talking to strategists from here inside the Beltway. Obviously, the conventional wisdom inside the bubble is important when you're dealing with Congress and the White House.
Yeah.
But hearing a perspective like that would be awfully important for both campaigns right now.
Yeah, and the message from Dr. King there essentially is consistency is key.
Yeah.
Not just 1 week of events that ultimately will make a difference when voters in specific demographic groups are questioning whether or not your policies ultimately have catered to them or not.
Her words were carefully chosen there. I'll be curious to see his reception at these events this week. Let's carry on. We're going to assemble the panel next. We've got Rick Davis and Brad Howard with us today. But first, we turn to Wall Street on this CPI day and get an update on trading. For that, of course, Charlie Pellet has the news from New York. Hey, Charlie.
Hi, thank you very much, Joe Matthew. Indeed, keeping an eye on S&P 5,300 right now, 52.98 and a decimal. Stocks rallying. CPI Wednesday, S&P up 51 again right now of 1%. We've got the Dow 300 points now, up 0.8%. NASDAQ up 185, higher by 1.1%. 10-year at 4.34%, with a 2-year now yielding 4.72%. Spot gold today is up $29 the ounce to $23.87, up 1.3%. West Texas Intermediate crude oil up 0.7%, 78.56 for a barrel of WTI. A slowdown in inflation is reinforcing bets that the Fed will be able to start cutting rates as early as September. JP Morgan Chase CEO Jamie Dimon is calling for full and thoughtful engagement with China, despite the country posing, quote, tough competition for the West. His comments coming in a Sky TV interview in London. JP Morgan Chase shares on an update for the rest of the market. JPM is trading lower now, down by about 0.5%. Again, recapping, S&P at 52.97. That is an advance of 1%. That's a Bloomberg Business Flash. Balance of Power continues. Back we go to Washington. Once again, your hosts, Kaylee Lyons and Joe Matthew.
All right, Charlie Pellet with a look at how we're trading on today, the 15th of May. But my eyes are looking out, Joe, to the 27th of June. My calendar is marked big red circle. First debate between Biden and Trump of the 2024 cycle is on.
It's going to be like a pin dropping in that room. Imagine no crowd.
Yeah.
No one's clapping, no cheering. Not that they're supposed to anyway, but this is what happens. And then they get their mics cut off when they go over time. It's going to be a surreal environment for these two.
Yeah, assuming that all those rules can be agreed to.
Fair enough.
When Donald Trump's indicating he would prefer something with a live audience, a bigger venue, maybe not wanting the mic to be clipped at any one time.
Yes, right.
So we'll see, I guess.
Again, assuming that everyone agrees to all of this. Let's see what the panel thinks. Rick Davis, of course, Bloomberg Politics contributor, Republican strategist, has actually not only run presidential campaigns, but been deeply involved in this planning process that typically includes the Commission on Presidential Debates. He's with us alongside Brad Howard, Democratic strategist, founder of the Corcoran Street Group. Brad, I know you're feeling pretty good about the position that Joe Biden is in walking into this. But how worried are you about live fact-checking or just Donald Trump, who never cared about the rules anyway? Why would he start now?
Yeah, I mean, that's obviously going to be a concern. We saw just how rattling it was when he did it to Hillary in 2016. The media was unprepared to hold him to account then. I think did better in 2020, but you're right. The combination of trying to hold him to account could envelop every single answer on that show. And I think there is some legitimate concern of, is it really the moderator's role to correct everything that they say? Should that be left up to the American people? So I think, I think there's a reasonable happy medium there. I think The moderators that I'm sure CNN will choose will be, they have a great set a bench of experienced moderators. And so I trust these news organizations to handle it better probably than the commission here. So we'll look forward to it. And Joe, just to the point of your son getting his driver's license, where I'm from, our response to that would just be bless your heart. So good luck with that.
Bless your heart. All right. Well, Rick, come on in here, because obviously we have seen a debate between Donald Trump and Joe Biden before in the 2020 cycle. We know how perhaps undignified at certain points it was to characterize it. How do you prep this go around for a debate between Donald Trump, who isn't always reluctant to stray from the truth, if you're Joe Biden, who tends to stick more to the truth?
Yeah, I think Joe Biden's going to have to really figure out a way to, distance himself from Trump, but also be really on alert, because I agree it's hard to fact check Donald Trump. But I mean, to some degree, that's going to be Biden's job. He can't just ignore factual misrepresentations coming from his opponent, because you can't rely on the moderators. CNN has a bad track record with Donald Trump. The much discussed town hall that CNN did during the campaign with Donald Trump turned into a lie fest, and they lost control of it. Donald Trump is a disruptive guy. He knows how to take control of these situations. He's got enough, capacity to really, be a disruptive force in something like a debate. And General Joe Biden, I mean, come on. I mean, he's a dignified guy who tries to play by the rules, even if there are no rules to be played by. And so I think that they're going to have to throw out the playbook with Joe Biden, force him to not think about debates the way he traditionally has. I mean, he's got 50 years of political experience debating on one set of rules. And this is a different time, a different place, and a different opponent. You've got to throw out that rule book and be ready to really go to town on Donald Trump and have a firm grasp of the facts so that he can correct the record, because if the record stands, he's going to look really bad.
I still have so many questions for both of you here, Brad, including who's going to watch. Nobody's going to mourn, I realize, the end or the death of the Commission on Presidential Debates, but there was a purpose here to not just have a presidential debate, for instance, on a single cable network. A lot of people won't even be able to watch that. We spend all day talking about cord cutting here, Brad. Are we going to lose something when the commission goes away?
I mean, possibly. It remains to be seen. I mean, there are ways that I imagine that these candidates will ensure that folks in their orbits will be able to watch. I think, as we've seen time and again, the first debate usually is a very highly watched affair. But you got to remember that the true thing that sway these debates is the spin afterwards. It's does a candidate give the other campaign a moment to really attack them with and run it in paid media over and over and over. So if Biden has a bad moment, if Trump has a bad moment, trust me, swing voters will see it in paid ads throughout the country. One has a good moment, another has a good moment. You'll see that in paid ads across the country. So they will get down, but the start to finish, kind of full broad spectrum, watching the debate. If you want to watch it, there will be ways to watch it. I'm sure there'll be watch parties and things on college campuses and et cetera. So I'm less concerned about that. I mean, the average viewer today is a little more savvy than they were probably 10 years ago. So there's an ability to find any program you want to watch these days.
This is going to raise the stakes, though, Kaylee. In that world, everyone's just going for a moment.
Right. You're looking for a soundbite or whatever can go viral on TikTok, or assuming we still have it at that point, we should, right? Both campaigns are on it, but it's about what gets replayed over and over again the next day, which just underscores, Rick, how much of this, especially for two candidates who are the age that they are, this is about performance and being able to show stamina and dexterity and speak in your speech when you're ad-libbing, not necessarily reading off a teleprompter. Is this ultimately really going to be about policy, especially because these two candidates are so well known, as are a lot of their stances?
Kelly, that's a fair statement. What do people really take away from these? I was there at the debate when George Bush looked at his watch. George H.W. Bush looked at his watch, and that's the only thing people could remember. That was a Bill Clinton win because of a enforced error on the part of the president. And remember, we have some history with these two guys. They have debated a couple times, and arguably Donald Trump lost the first debate because he kept talking over Joe Biden. I mean, like, he went in loaded for bear. He was not going to give Biden a chance to speak, and Biden so famously said, shut up and let me finish my answer. And that became, I mean, like, there's nothing substantive about that, but it was like, wow, right. Joe Biden didn't fall asleep at the debate. This is good. And he actually pushed back on Donald Trump, who was kind of being a bully. So, yeah, I think you're right, Kayleigh. I think these have the opportunity to showcase the vitality of the candidates, but also their ability to sort of operate under the heat of those Klieg lights that are going to be on that studio in Atlanta. And I do think it's going to be that dynamic between the two of them, because I don't care what moderator you get. I'm sure CNN will post up some really good ones. They're going to lose control of this debate in the first 5 minutes, and then it's going to be mano a mano, and we'll see what happens then.
Picturing the weigh-in at some point here, Kayleigh. I feel like this is like pay-per-view stuff. Was this on purpose, Brad, to make sure RFK Jr. was not allowed on the stage? I know that he's not on the ballot in most states, but there's some polls showing him 15 to 20%. He could potentially qualify for an old-fashioned commission debate.
I don't know. I mean, I think it's a roll of the dice with who RFK hurts and helps. A lot of his conspiracy-based theories on vaccines and et cetera, have traditionally have a home in the Trump orbit. His, last name is a home in the Democratic orbit, and there's not enough data to suggest. I mean, polling goes both ways on this. So, I don't know. I think, I agree with Rick. I thought he had a really good analysis of that. If you can't get to 270 because you're not on enough states, then you should not be in these debates. I agree with that. I think what's interesting here, though, is, if I were Trump, I'd be a little more careful of how he's approaching these debates, because right now he's setting the standard where Trump has very high expectations and Joe Biden has very low expectations. And so Joe Biden doesn't literally fall asleep at the podium. He may have a win and may have won the expectations game, which is a big part of these debates as well.
That's right.
Rick, finally, I know we just had a whole conversation about how much of this is about performance over policy, but is a debate the best chance for Joe Biden to actually clarify what his policy in regard to Israel is, considering all the back and forth we have seen in the last few weeks?
Yeah, I think it certainly gives him a chance to talk directly to voters, and he has been sort of flip-flopping on this, which is all unforced errors on his part, right? I mean, like, he was fine with the approach he took. He decided to veer the other way. Republicans now are taking advantage of that, especially in the House of Representatives, forcing Democrats to take sticky votes on Israel. The bottom line is he needs to convince people that he's got a firm grasp of the economy, because nobody is going to decide this election on Israel, but it is going to be decided on the economy. And regardless of what the economic measures are today, especially with the CPI, he isn't getting that through to the American people. And if that's not the major topic of his conversation, he's cheating himself and his administration on the progress they've made, and he will not be able to get voters to start thinking differently about the economy.
All right, Rick Davis, Bloomberg Politics contributor and Republican strategist, and Brad Howard of Corcoran Street Group. Thank you both so much for joining us. And of course, Joe, Rick was alluding to there, the vote that's going to take place in the House later today. Everybody's going to have to get on the record with what is largely a messaging bill, but a bill that would force Joe Biden to send currently withheld arms to Israel.
We've seen reports as many as 40 Democrats could break from the White House on this, so this is going to be an important one. We'll talk to Jack Fitzpatrick about that bit later this hour.
Indeed we will. First, though, we got to get a check on world and national news elsewhere, and Amy Morris has that for us in our 99.1 newsroom here in Washington. Hey, Amy.
Hi, Kayleigh. Slovakia's populist Prime Minister Robert Fico remains in a life-threatening situation after being wounded in a shooting today. His office says he was shot multiple times. Condemnations of political violence now coming in from leaders across Europe, including Fico's political rivals. And the White House has released a statement saying that President Biden was, quote, alarmed to hear reports of an attack on Fico. And he says the U.S. stands ready to assist. President Biden has challenged Donald Trump to a debate, and Trump has accepted, and so now there will be two campaign debates, one set for June 27th, hosted by CNN, and on September 10th, hosted by ABC. CNN says its debate will be held in Atlanta studios and no audience will be present. President Biden didn't want an audience for the debate. Trump wants a big crowd. President Biden's campaign also doesn't want to include third-party candidates, but CNN is holding the door open for a third candidate who may meet polling and ballot access requirements. And U.S. officials say help is on the way to Ukraine. The Secretary of State announcing a special $2 billion fund set up by the U.S. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
9:40 on Wall Street. We do check markets all day long here at Bloomberg. Moments ago, the S&P 500 index did break through 5,300. 5,300.80 on the S&P. Stock surging today. Right now, the S&P just below that big round number of 52 points, up 1% to 52.99. But moments ago, the S&P did eclipse 5,300. Right now, the Dow up 282, gain there of 0.7%. NASDAQ up 201 right now, higher by 1.2%. Big question today, will we close above or below 5,300? Keep it locked into Bloomberg Television and Radio for the latest. We've got the 10-year yielding 4.34%, 2-year 4.72%. Spot gold is moving higher by $31 the ounce to $23.90, a gain there of 1.4%. West Texas Intermediate crude up now by about 0.6%. Bottom line here, U.S. equities as measured by the S&P trading at a record. A slowdown in inflation is reinforcing bets that the Federal Reserve will be able to start cutting interest rates as early as September. Shares of GameStop moving lower today. Eric, coming out a lot of the meme stocks. We've got GameStop down now by 27%. AMC lower now by 21%. So again, recapping and repeating, we did see a print above 5,300 on the S&P. Right now, the S&P up 51 at 52.98, a gain there of 1%. Balance of Power continues. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Limes.
All right, Charlie Pellet, thank you. The market checks from Charlie tie right into what we're talking about today in Washington on this CPI day as we try to figure out next steps here for the Fed and exactly what is the state of our economy, knowing that the headline numbers don't always tell the whole story. I'm Joe Matthew alongside Kaylee Limes in Washington. It's good to have you with us on Bloomberg TV and radio. The euphoria on the street is one thing, Kaylee, but it's a different consideration when you start talking to economists about where we are.
Yeah, especially if you're talking about economists who live over at the Federal Reserve, right, who, yes, may be encouraged by this 1 month of data, but at the end of the day, this is just 1 month of data after 3 consecutive CPI prints that came in hot. It's great news to get one that was cooler than expected, but they're looking for a pattern here, not just a one-off, especially because they are haunted by the ghosts of decades past and do not want to risk cutting rates too early. So that is where we begin with Lindsay Owen. She is Groundwork Collaborative Executive Director, former Senior Economic Policy Advisor to Senator Elizabeth Warren. Lindsay, welcome back to Balance of Power. Obviously, you can see good things in the data today, but how many more data sets like this are we going to need to get before the Fed can feel comfortable cutting interest rates?
Yeah, thanks for having me. I mean, look, the print this morning was undeniably good news. Good news, I think, for American families, good news for the White House, and hopefully good news over at the Eccles building, where the chair of the Federal Reserve hangs out as well. Seeing core CPI come in at its lowest level since April of 2021, really 3 years now, when you sort of cleave off those food costs and those energy costs, that's just really, really great to see. And so, we'll see sort of how many more good prints the Federal Reserve Chair needs to see before he moves to rate cuts. But, hard to ask for much better than what we saw this morning.
So instead of trying to predict the Fed, Lindsay, what's your thought? Should we start cutting now?
Oh, absolutely. I mean, you do not want to be behind the 8 ball on rate cuts. We've got a strong job market right now. We've got wages beating prices. And look, while the trend line hasn't been as sort of steadily downward as we'd like, overall, inflation has really been coming down off its peak for over a year and a half now. And so I think the line is moving in the right direction. Borrowing costs are really pinching families. We're really starting to see some negative impacts in the housing market where mortgage rates are sky high. So I'd really like to see a rate cut sooner rather than later, September at the latest.
Well, as you talk about what's happening in the housing market, it's worth pointing out that where we're still seeing the stickiness in inflation does include shelter prices. That has been pretty persistent over a number of data sets. So, Lindsay, what's the solution there? Are higher interest rates going to help solve that problem?
No, I'm quite the opposite, right? High interest rates lead to high mortgage rates, which keep folks in the rental market unable to come in to the single-family housing market, and that keeps rent prices high, and that shows up in that shelter index, which also there's some data issues there too, right? The shelter index really lags, and so it takes a little while for us to get relief on housing costs that show up in the CPI print. But if you're worried about housing costs in the United States, a high interest rate environment is certainly not going to get you in the right direction. It's not going to get Americans any relief in the housing market.
Spending time with Lindsay Owens from the Groundwork Collaborative. Lindsay, President Biden made a big splash yesterday announcing new tariffs on some Chinese imports, with some big increases on EVs, solar panels, some other things, semiconductors, while keeping all of the Trump tariffs in place. Is this the new normal now, this protectionist approach for Democrats and Republicans?
Yeah, I think that's exactly right. Tariffs used to be a four-letter word in both parties in Washington, really just a decade ago. And I think there's been a sea change in how folks on both sides of the aisle think about trade and think about what makes a strong and resilient American economy. I mean, I like to go back to the eve of the pandemic when I think Americans really got a glimpse of what it looks like to have an economy that is reliant on imports from China. And, what we saw when the pandemic hit is we couldn't make anything here. We couldn't make the COVID tests here. We couldn't keep PPE moving here. We had all sorts of shortages because of the supply chains being gummed up. Coming in from Asia and China in particular. And I think Americans took a look around and said, look, a resilient economy, a strong economy is one in which we have a vibrant manufacturing class in America, and is one in which we can sort of keep our own shelves stocked during a crisis. And so I think the Biden administration is making the exact right move when it comes to trade with China. If you want a green transition, a strong green transition, completely relying on cheap solar panels for China is going to get you in a heap of trouble.
Okay, so Lindsay, you think the Biden administration is making the right move here, but essentially the move that they have made is to stand by the decisions of the Trump administration when it comes to tariffs and, in fact, just go further in certain key sectors. When Trump first implemented these tariffs, when that trade war kicked off back in 2018, there was a lot of talk among economists about the detrimental effects that was going to have on the U.S. economy. It doesn't feel like we're hearing that as much this time around, and I just wonder why.
Look, I think the economics profession is evolving, albeit slowly on this point. But I think part of this is that the story isn't just about trade deficits here, right? The story is about trade-offs, if you will. What are the things that we're trying to build a strong economy? One of the things we want is good jobs in America. If we make all of our EVs in China, we don't have a vibrant auto manufacturing industry in America. So that's an important piece of what we're trying to do with trade policy here. As I mentioned, we're looking for a green transition, but we're looking for a resilient green transition, one that isn't going to be at the whims of shifts in the Chinese economy, but that is durable in the United States economy too. And so I think when you look at the big picture, when you look at the suite of interests here, the American worker, what we want for American industrial policy, and what our foreign policy concerns are as well, it really points to the types of decisions that the Biden administration is rolling out based on really thorough reviews by the USTR's office.
Lindsay, it's great to have you back. Lindsay Owens, Groundwork Collaborative Executive Director. Her view on today's CPI data. Great to have you back, Lindsay. I'm Joe Matthew in Washington with Kaylee Lyons here on Balance of Power. The fastest show in politics keeps an eye, of course, on Capitol Hill at all times, and there's an important vote coming today. This is not about lawmaking as much as messaging, and it has everything to do with Israel, Kaylee, after President Biden last week chose to withhold some weapons shipments. That got the Republican Speaker, Mike Johnson, thinking of a whole new way to paint Democrats into a corner.
Yeah, make them go on record with a bill that would essentially force President Biden to send the withheld weapons to Israel. But we were speaking with one very pro-Israel Democrat on this show yesterday, Congressman Brad Sherman, the Democrat from California. He said he's probably going to vote no because Republicans didn't work with Democrats on the specific language in this bill, and he worries that this is going to go well beyond just this scenario, have set a precedent for future policy going forward.
I think you said probably, no?
Probably.
Always want to wait till the,
there was a hedge
the
there.
last minute, but that's true. The White House is trying hard to keep Democrats together on this, with dozens potentially voting for this Republican-led effort, which could make things interesting in the messaging campaign when it comes to Israel. Jack Fitzpatrick joins us right now, live from the Capitol, Bloomberg Government's Congress reporter, back with us here on Balance of Power. And Jack, it's good to see you. We're going to get this vote before the close of business today.
We're going to get one of two votes. They're actually about to vote on the rule for consideration for a few bills, including this Israel bill. That should be pretty easy for Republicans to stick together despite the troubles they've had in passing their own rules. The vote on the actual bill itself is not specifically scheduled for today yet, so we might have to wait until tomorrow for the individual vote on this Israel bill. But you're right that at least right now, the focus is on the politics of how many Democrats can they peel off, how many Democratic votes can they get in support of this? I would say I've heard this referred to as a symbolic bill. There's some pretty strong legislative language in there, so it's also something to keep in mind by the time they fund the government, which probably won't be until the end of the calendar year. Depending on what happens with the election, depending on what happens with this vote, there may be some legislative opportunities to work in these kinds of measures to force the president's hand on Israel in actual legislation. But right now, the focus is on the politics of this vote.
Okay, so on those politics, Jack, do we have a sense of what the whip count really is looking like for Democrats at this point?
We don't know yet, and I'm not sure we will learn a ton by the rule vote before the actual vote on passage. It is meant from a Republican perspective to challenge Democrats and put them on the record and basically say, how supportive are you really of the Israel aid that we all just passed? But as you mentioned, someone like Brad Sherman, someone like Dan Goldman, there are Democrats who don't take kindly to what they see as a politicization of the issue of support for Israel. So while Democratic leaders are whipping members to vote no on this, and we saw the veto threat by the White House, it's going to be an interesting test, at least, to see how many votes they lose. I'd be surprised if it was unanimous opposition from Democrats, but they are putting the effort in to circle the wagons and oppose this bill.
Even as this story is getting kind of confusing, Jack, and you know I get confused easily. The U.S., we learned today, is moving forward with $1 billion new arms shipment to Israel. Last week, we were talking about delaying shipments, and of course, we had the supplemental with $14 billion or something like that in it a couple of weeks earlier. The package includes, according to a story first reported by the Wall Street Journal, $700 million in tank ammo, $500 million tactical vehicles, $60 million in mortar rounds. These are not defensive weapons. So what's really going on here?
Yeah, you know, as the White House has been pressed on this issue, they have emphasized that they support Israel. They are going to follow the law in terms of the bill that was enacted that provided those resources, and that it's the president's words refer to a fairly narrow exclusion of offensive weapons. But as you mentioned, those are offensive weapons. Now, he said they wouldn't send offensive weapons if Israel moves into Rafah. The Biden administration will have some tough decisions to make in terms of exactly when they draw the line and say, we're cutting you off. They have not gotten to that point yet. The politics of this and the international affairs angle is very much focused on the threat by Biden and the change of tone. Not to say it's not a substantive issue, but you know, saying it is one thing, deciding exactly when to cut off offensive weapons may be another. And again, the White House has said they're not entirely changing their tune on support for Israel. So there's a lot of parsing, a lot of details to parse on this.
Absolutely. Now, something else we want to mention that the House may take up, or is going to have to take up, frankly, this week, not just this Israel bill, but also the FAA reauthorization. They had last week punted it a further week. The new deadline is Friday for the actual 5-year bill that the Senate passed. When is that going to happen, Jack?
That is about to happen, it looks like. At the end of the vote series that they just started in the House, they are supposed to vote under suspension of the rules, which means they sped through, they skipped the step where they have to separately vote on a rule for consideration. They believe they have enough bipartisan support to get 2/3 supermajority, which is necessary to vote under suspension of the rules. So assuming there's no major surprises, that should make it through the House within the hour, if not even less. And that is a good sign that there weren't surprises or more opposition than expected, given that they are quickly taking this up under suspension of the rules.
Bloomberg Government's Jack Fitzpatrick is with us live on Capitol Hill. I have to ask you about the speaker while you're with us, Jack, because it seems like he upset a lot of Democrats by going to Lower Manhattan yesterday to be part of this media opportunity, I guess we'll call it, outside of the courthouse to support Donald Trump in his criminal hush money trial. Democrats today are saying, don't look at us next time you need a bailout with a motion to vacate. Was that a one and done? Is he vulnerable again now after this move?
That is a very active question. Democrats are going to have to constantly be reevaluating, what has he done for Democrats that makes it worth it to keep him in power if there's another revolt, and who's the alternative? I am a little skeptical that there'd be another revolt as we get closer and closer to Election Day, so it may be sort of refreshed as we move toward the next Congress, but it's very much something that Democrats are going to have to constantly think about going forward.
Got it.
All right, Jack Fitzpatrick of Bloomberg Government, constantly thinking about Congress. Thank you so much. Joe and I constantly think about all things politics. We'll be back with more politics at 5 p.m. on Bloomberg TV and radio.
Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
And a very good afternoon, everybody, live on radio, TV, YouTube, Bloomberg Originals. This is Bloomberg Business Week for this Wednesday, May 15th. He's back.
I'm back.
I missed
I'm back.
you.
I
We
missed you too. I kind of feel a little out of it, to be honest.
Well, but you came back for the big report of
I was
the
going
week.
to say, I come back and meme stocks are doing their thing, and now we're at the new high for the S&P 500 and the NASDAQ.
You're really all about CPI, aren't you?
I am. I'm all about CPI.
Yeah, that's why he's here today, guys. All right, we're going to get into it. Everything seems to be awesome on this Wednesday, or is it? Stock bulls certainly seem to think so. We've got the S&P hitting an all-time high. We're up above 5,300. We are on track for the 23rd record closing here in 2024. So interesting. All it takes is an inflation print. And a retail sales print too, but we'll get into that.
I was going to say, we have all of the economic data in just a few minutes. We got a great roundtable here in the Bloomberg studio. Plus, with the S&P 500 up nearly 30% since late October, we got Raylan Lambert, the head of alternatives over at Mercer, making the case for investing in alternatives.
Real estate, PE, private credit.
This is like everything you talked about at Milken.
It's absolutely everything we talked about at Milken. Hey,
Which
and also
was only a week ago. Is that kind of weird to think?
Feels like a month.
It feels
but
like
hey,
a month, yeah.
Speaking of Milken, the other thing we talked a lot about was AI. How do you make money off of artificial intelligence? Well, how do you make money in AI? That is the subject of a story, the remarks in the new issue of Bloomberg Business Week. That's coming up. We're going to talk with our own Brad Stone.
Okay, how about this for one more thing, Carol? A little squeamish when it comes to like needles and stuff. Well, it turns out IV drips are sort of the newest amenity when it comes to luxury living.
Not just swimming pools?
No, not
Fitness centers?
IV drips.
IV drips.
Yeah, enough said.
All right, first up, let's get a check on the trade on this Wednesday and a look at some of your top business stories. Here is Charlie Pellet.
Hi, thank you very much. 5,300 and a decimal right to the numbers on the S&P. Big day for big round numbers. S&P up 53 right now, higher by 1%. CPI Wednesday. The Dow up 280, up 0.7%. NASDAQ up 213, up now by 1.3%. The big question, will 5,300 hold at the close? 10-year, 4.34%, with a 2-year, 4.73%. Spot gold now is up 1.3%, 23.88 the ounce. West Texas Intermediate crude up 0.6%, 78.53 a barrel. We've got some air coming out of those meme stocks today. GameStop, case in point, down now by 20.1%. AMC shares down now by 17%. Well, your next Uber ride could be the bus. Uber is launching shuttle bus services to and from airports, concert venues, and sports stadiums, bringing a lower-cost service that's already available in its overseas markets to the U.S. as inflation remains stubbornly high. Right now, Uber shares, they are advancing today. Uber up 1.4%, rival Lyft trading lower by 0.7%. Recapping a 5,300 print right now on the S&P 500 index, 5,300 and a decimal, up now by 1%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Much appreciated, Charlie Pellet. All right, let's get back to the day's economic news. We've been waiting for it all week long. A measure of underlying U.S. inflation cooling in the month of April for the first time in 6 months. A small step in the right direction for Fed officials who are looking to start cutting interest rates this year, at least some of them maybe. The so-called core consumer price index, ex-food and energy costs climbing 0.3% in the month of March, snapping a streak of 3 above forecast readings. That's a trend line, by the way, which spurred concern that inflation was becoming entrenched. The year-over-year measure, Tim, cooling to the slowest pace in 3 years.
Okay, not just the CPI data, but we also got the retail sales data stagnating in April after downwardly revised gains in the prior 2 months, indicating high borrowing costs and mounting debt are encouraging greater prudence among shoppers. All of it is seeing that, equities higher, bond yields lower on the day today. So let's get to Molly Smith now. She's Bloomberg News economics editor. She's here in the studio. So Molly, Carol said a trend is what we were seeing when it came to previous month's reports. Does one Fed-friendly report make a new trend? Because it certainly seems like that's how the market's reacting.
Yeah, and I think a lot of people tell you the market is overreacting in that perspective, and that one print absolutely does not make a trend, and that very much remains to be seen if inflation is sustainably retreating or resuming again that downward trend. And by the way, 0.3%, sure, it's better than 3 straight months of 0.4, but 0.03 on an annualized basis, still well above the 2% goal. That's not what the Fed is looking for. Maybe you start to get a string of increases.
Still at 3.4% year over year, right? Headline?
Yes, and the core at 3.6. That's the one that was the lowest in 3 years. So of course, yeah, you like to see that this direction is starting to happen again, but 1 month certainly doesn't indicate that it's going to happen again.
The devil's in the details. We've been hearing everybody talk about, high shelter costs and so on and so forth. We look at different things like energy. The details within the report. Anything significant there that maybe says, oh, maybe something different is happening?
Well, within
or not.
Yeah, I mean, within shelter, some promising signs there, and our upcoming guest perhaps will have some things to say about that.
That's a deep
tease. Am I allowed to bring
tease.
him in?
Maybe not
Is that
so
a thing? Can I do that?
Joining us now. Go ahead.
Joining us now, Stu Paul, Bloomberg economics economist, with us here in the Bloomberg Interactive Broker Studio. Hey, Stu. Do you want to talk about housing inflation?
Sure. So we did see rents step down a little bit to about 0.35% month on month. OER, the owner's equivalent of rent, is still a bit stubborn, staying above 0.4% on the month. Carol, if we're looking at some of the other items under the hood, I think that it's the lack of change that we actually see on the month that's the most interesting. Excluding autos, core goods prices are still rising. That's pretty atypical.
You go shopping, you feel it.
You definitely feel it. And if you look at autos, you might have been surprised to see auto prices declining on a seasonally adjusted basis, 1.4%. That's because about 2/3 of that decline is really the seasonal adjustment factor. It's not what you're seeing when you walk on the lot to buy a car. And then if you're looking at the prices of some discretionary services categories, things like recreational services, prices are still increasing too fast for the Fed.
And also the non-recreational services, I think the ones that you really can't avoid, like car insurance, huge. That's still rising at like the fastest annual rate since the 70s.
Yeah, it's not just that if you have a teenager in the house that it's expensive. It's
Correct.
expensive.
Right, yeah, for the rest of us too. So car insurance, a big one, medical care, a big one. I mean, these are things that you just can't avoid. But yeah, the recreation ones for sure, if you want to go out and have some fun.
The two of you are painting a picture for us that doesn't necessarily go in line with what we're seeing in the equity and the bond market today. And I'm wondering, Stuart, if you absolutely think that at least the equity market is overreacting.
Perhaps a little bit. Perhaps it's that markets are looking at retail sales number that were pretty dismal. Just across the board, retail sales surprised to the downside. So that would warrant some expectation for perhaps a second Fed rate cut this year. There was just one full cut priced before this morning. Now we're seeing 2 full cuts priced. But yeah, across the board, retail sales were pretty dismal. If we were just to exclude gasoline prices, we would have had a negative headline print. Headline just held flat on a nominal basis. On a real basis, we're seeing declining retail sales.
That's a bummer. We've talked about how important consumers are to the economy, correct?
Yeah, absolutely. And if we're kicking off Q2 data, we are getting our first print, our first hint at what consumer spending is going to be for the second quarter. It's going to be a material slowdown in real terms from the 2.5% annual basis that we printed in Q1.
All right, so got to bring in Ira Jersey because we are now talking about the markets and we want to get to the bond market and the rates curve. Ira Jersey, Chief U.S. Interest Rate Strategist at Bloomberg Intelligence at BI headquarters out there in Princeton, New Jersey. I mean, I'm looking at a 10-year at 434, a 2-year note at 473. I mean, we've seen a dramatic move down here, Ira. Walk us through it and what it says to you and the significance of the moves.
Yeah, so I think the market had to reprice the idea that the Fed might not be cutting as aggressively as they thought earlier in the year. And the market, the bond market tends to overshoot a little bit, right? You get a lot of positioning where people are long, they get out of those positions, there's not a lot of liquidity, then people are fearing that, hey, maybe the Fed might even hike this year, so they wind up maybe even getting a little short. So I think we're trying to find an equilibrium here. 435 was a pretty important technical level. If we close below that, then that could set us up for a little bit more of a rally here in the long end of the yield curve. But I think probably low 4, call it 425 to 450 might ultimately be a range that we stay in until we get more convincing data one way or the other, that either the Fed's going to be on hold for the entire year and into 2025, or maybe they actually factually will cut, and if we start to price that higher probability of those more cuts in, then obviously the market will rally a little bit more.
Well, it's interesting, Eric, because we're seeing quite a reaction, as Carol has talked about, as you've just talked about, and I'm wondering if this to you says that, wait a second, the worst in terms of where we think that rates are going to go is actually behind us this year. Is that what the bond market's telling us?
Well, I think there's two pieces to it. I think one is that there were people who were fearful that the data would, that the inflation data in particular would come out a little bit hotter than expected, so they came in short. And shorts had built over a while, so I think part of this is just positioning and, like I said, a relief rally. And the retail sales numbers, as Stuart and you guys just mentioned, were not particularly good. Although, you know, there's some oddities sometimes in when you have a good print like we had in March, April can be a little bit weaker. So if you look at longer term averages, those haven't changed a whole heck of a lot. But the market, I think, was relieved that you didn't have stronger data. And because of that, there were people who were comfortable just getting long at 4.4%, depending on where in the curve you're talking about, and just holding that and thinking, okay, look, my risk reward seems to be decent now. Being short is hard now too, right? Because if you're short the market, your carry, so the amount that you have to pay to be short, continues to go up a little bit. And because of that, it's just hard to stay short for a long period of time. So one reason why you know people just get out of these things is because tail risks are going away.
Right. Interesting though, if I look at retail sales, I mean, and we did see revisions for the prior month, for the month of March, but you do make a good point, Ira, and let me bring in you guys, Molly and Stuart, in terms of we did have a strong month the month before, and so we saw it's a very different story this month. Is there something, you know, to what Ira is saying, that when you have a strong month, you see some weakness the following month?
There typically is there's a little bit of a give back. Ira's right there. The thing that I like to think about under the hood, though, especially when we're looking at retail sales, all the figures are nominal. So even in the pockets of strength that we did see in this report, something like clothing, which spending on clothing rose about 1.5%. Prices were also rising in clothing, right, about 1.2% on the month. So Ira's right. When you do look at trends, it's not as bad as a single month may make it seem. There's a little bit of give back this month. But under the hood, it's just not a very good report. And when we are kicking off the second quarter, I think it's important to mark the change in momentum, or at least the waning momentum.
Well, it does feel, right, it just, like, you look at the numbers, the contrast, Molly, is pretty strong.
Yeah, I mean, that point on clothing that Stuart just made is a good one. Like, the whole point of, like, when we're saying that, like, these sales are nominal versus inflation adjusted is that you can't tell that a % increase in a category like apparel is due to higher prices or due to actual more spending activity. So that's what makes this difficult to interpret. But when there is a period like this where clothing prices did rise in the month, of course makes you think that, like, maybe it is more price driven than spending driven. So that's the thing about retail sales, that it's difficult to parse through this report and make, like, strong conclusions about what's actually happening. But we do know that household debt reached a record high in the first quarter of this year. We do know that consumer credit has generally been weakening, that delinquencies are still pretty low but are rising. So maybe signals a little bit more discretion among consumers in that sense.
I was going to say, Carol, you and I were having a chat a little earlier as we were preparing for the program about CPI versus PCE, and the idea that, okay, come on, guys, I thought this was...
Who cares,
Who cares about PCE?
No, who cares about CPI? I thought PCE was the preferred method, the preferred measure of inflation for the Fed.
It is, but it doesn't come out for another 2 weeks.
It doesn't, but we put so much stock in this until that comes out.
Because it is the single biggest market moving event of the month. And I think that's going to probably remain that way for some time. I mean, remember this, before, inflation really got to where it was in 2022, the biggest market moving event of the month was the jobs report. And that has very much shifted to the CPI.
Well, it makes me think about, Ira, come on back in here, and we always talk about you, about the kind of focal points for the market, and certainly for Treasury traders and watching what goes on with rates. I mean, you've got, a jobs report in a couple of weeks or so. I'm thinking about the next Fed meeting, June 12th, not so far off, about a month, a little bit less than a month away. And I believe do we get a CPI print also on that Fed day?
We'll also get updated projections.
And updated. So as you watch the rates curve, is it just pretty quiet until we just kind of trade around those key metrics again?
Oh, no, I think that we'll have more volatility at just about every data print that comes up, particularly the inflation one. So actually, for the rates market, the payrolls report is still the granddaddy of all economic data where you see rates move. Today's move wasn't because of CPI, right? Like, it's pretty clear because the miss on CPI was minute, so it was actually something else that moved the market today. But CPI is obviously really important. So will the GDP report in a couple of weeks, and so will the revision to that, as well as obviously the April income and spending, and therefore the inflation report. All of those things are going to matter. The trends, and if there is a shift in trend, you'll wind up seeing that in things like the personal spending report, because that's a broader report than the retail sales report, right? And Stuart can talk more about this, but from a long-term trend perspective, like the market tends to focus on these very high frequency data, but when you look at the longer-term trends and look for turns, you have to take the whole, the entire story and build the whole mosaic around all of the incoming information that's coming in, and see if things are going to shift. And the bond market tends to do that exceptionally quickly, and a lot of times incorrectly, right? It focuses on one thing that ultimately turns out to be a false indicator. And we used to move a lot on ISM reports, and ISM has been wrong basically for the last 6 months. So the market's now ignoring a lot of the survey data and using the hard data, like the retail sales, like CPI, like the growth GDP report. Those are the things that the market's focused on now, not ISM, not consumer confidence, none of that stuff.
Hey, Stuart, come on in. Ira certainly name-checked you there, and I want to know what goes into building your mosaic when you're thinking about the data that we're getting in the coming weeks.
So just broadly, if we just look at a broad swath of data and we look at some of the surprises that we've seen, prices have been surprising to the upside, excluding what we saw in headline CPI today. Again, under the hood, though, still a lot of persistent inflation going on. Indicators of growth, it's a bit more mixed, but generally speaking, it's just too strong of an economic environment to encourage retailers, to encourage folks to start cutting prices to get the deflation, the disinflation that we would need for the Fed to then get to its point that it would be comfortable pivoting with policy rates. And if that's the case, again, one downside surprise in the headline CPI is not going to do it. The headline. So to Ira's point, a lot of these high frequency data will matter for markets, and it'll matter for even getting the timing of the first Fed rate cut right. Is it possible that we get something in July? Maybe. But in terms of determining the economic landscape and the trajectory over the next year, it's not going to matter much if it's July or September, or even if they just get one off in December, which I think, frankly, is an increasingly likely case.
Real quickly, Ira, 20 seconds. So in terms of a 10-year, I mean, do we take 5% off the table at this point, or 5.25? I mean, it's just amazing the swings that we've seen this year.
Yeah, I think that we've seen the cycle high in terms of the 10-year yield. That doesn't mean we can't go back to 470 or 475 if we, do price out, like Stuart just said, another cut this year or maybe another cut next year. But the market's still going to think they're going to cut at some point, so therefore, rates don't have to go up much higher.
Not if, just when. We're still data dependent, Molly, really quick.
All day. And I just want to say one thing I just wanted to point out. Downside surprise on the headline CPI. Everything else came in as expected. Right. So
good point.
To Ira's point of this being a relief rally, that things were just in line and not worse.
Molly Smith, Stuart Paul, Ira Jersey. That's our Bloomberg team, the amazing trifecta. All right, everybody. Coming up next, I feel like you've done pretty well on stocks. We have an alternative. That's next.
Wall Street. We do check markets all day long here at Bloomberg. 5,300 on the S&P 500 index. Traders sending stocks to highs as an inflation slowdown on the CPI Wednesday reinforced bets that the Fed will cut rates as early as September. S&P right now 5300 and change, up by 1%. Dow Industrial is up 0.7%, up 267 points. We have got NASDAQ up 216, up by 1.3%. 10-year 4.35% with a 2-year 4.73%. Spot gold now up 1.2%, 23.87 the ounce. West Texas Intermediate crude up 0.8%, 78.63 on West Texas Intermediate crude. Netflix is going to be airing 2 NFL games this Christmas Day in the streaming TV giant's latest push into live events. The 3-season pack will also see Netflix host at least one Christmas game in both 2025 and 2026. Netflix today down 0.3%. Recapping S&P up by 1% right now at 5301. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. Well, JP Morgan out with a list of alt investments to keep an eye on. The firm highlighting private equity, private credit, real estate, infrastructure, also secondaries. Sounds like certainly a lot of the topics that we talked about at Milken, that's for sure.
Yeah, well, our next guest is the head of alt investment over at Mercer Alternatives. Joining us is Raylan Lambert, global alternatives leader at Mercer Alternatives. It's the alt investment arm of the consulting firm Mercer. It's got $160 billion in assets under management overall and $25 billion when it comes to the alternatives space. She joins us from Rancho Cordova, California. Raylan, good to have you on the program this afternoon. So I'm curious about what you're seeing in terms of demand right now, because as Carol mentioned, I mean, last week at Milken, 100%, pretty much all about alternatives and AI, I guess we could throw in there at this point.
A lot of private credit.
But what are you seeing in terms of demand right now and in terms of what investors want to see as an overall portion of their portfolio dedicated to alternatives?
Well, sure. Thank you. You know, given that we have the tools in our toolkit to help clients implement their total portfolios, as you indicated, alternatives is certainly a growing component of that. When you think about where portfolios are today versus the 60-40 allocation just a few years ago, the reality is I think investors are realizing if you're not investing in private markets, you are missing a huge component of the investable universe. And so you mentioned private credit. That has continued to be a high growth area for us, particularly amongst our European investors and others that are looking for, you know, current income and yield. Infrastructure, we've been long-standing investors in infrastructure, and so certainly as the energy transition continues, digitization, energy security, those themes certainly carry through. And of course, private equity is certainly a hallmark of what clients seek our help from both an advice and implementation standpoint. And so that is an area that we continue to focus, and certainly happy to touch on AI.
Yeah, well, and I do want to touch on it, but first I want to ask you, Raylan, private equity, different from private credit, different from real estate, different from infrastructure, right? So I'm curious, you know, where are the fundamentals and the environment's best idea, if you will, in the alt space, alt investing space?
Well, one of the things we really try to do is connect the dots for investors. Rather than digging deep into, say, a specific strategy, we look at thematically, what is the possibility of inflation going to have on portfolios? Clients want to know, how should they position that relative to concerns around geopolitics, stagflation, and certainly market volatility? Interestingly enough, you know, there's been some concern from some investors about private equity in a higher inflation environment. We've recently put out, you know, every year we try to prognosticate if we can on what's going to be happening. And one of the things we found with respect to inflation and private equity is, in fact, there's not really a correlation between a high inflationary environment and the returns that investors can attain in private markets. In fact, if you look in the early 2000s, interest rates were pretty at parity with where they are today, and that happened to be quite a strong returning environment. And so it's really approaching those themes and
Right.
how they might impact allocation.
Well, maybe not rates, or interest rates in terms of private equity. I think one of the big discussions we've certainly have had here at Bloomberg is just, private equity investors who've invested in these PE funds are looking for some exits, right, to get some of their returns back. And it's not been a great market, as I don't need to tell you, IPO, M&A. Yes, we've seen some big deals, but it's been way down, certainly from the $5 trillion we saw a few years ago, kind of the peak of M&A. So it's like, what's going on in terms of the exit space? What are you seeing on that front? And then private equity kind of competing to put that money to work. And I do think about how that drives up valuation. So what kind of insight can you give us on those fronts?
Yeah, sure. You hit the nail on the head. I mean, certainly distributions are lower. And you mentioned, 2023 was a very low activity in terms of M&A. But one of the things that's great about this asset class is it's very innovative. And so we're seeing a lot of deal flow in other areas, right? We're seeing it in terms of secondaries, a lot of GP-led deals. They're looking to hold on to those crown jewel assets, continue to, add value. So those opportunities offer exit. There's also opportunities to enter into sort of a midlife. So some opportunity to provide some liquidity by way of having new investors add value. So even though distributions are down, we are seeing interesting ways for liquidity to occur. That also includes certainly the whole growth of liquidity solutions for both LPs and GPs, whether that's an outright sale or some sort of lending facility to facilitate liquidity.
Hey, Vreeland, I'm curious about the fee structure when it comes to alternatives in a portfolio over at Mercer. How does the fee structure compare to equities and fixed income when it comes to a person's portfolio?
Yeah, I mean, generally these are, long-term hold investments, right? And so it takes a lot to source those deals, to add the value, and then ultimately to exit them. But we have seen over the years, fees have been coming down. And certainly when you've got the scale that somebody like Mercer does, there's a lot of opportunity as we have partners around the world, the GPs that we invest on behalf of our clients, to find ways to, bring those fees down, but in a way that continues the alignment between GPs and LPs. So I'd say that fees have come down quite measurably, at least from the 2 and 20 back in the 90s. Yeah. That was, but certainly higher than the more traditional, more liquid asset classes.
But would they be like, I don't know, twice as high as you'd find in the equities portfolio, or 3 times as high? You just give us some numbers here.
It really depends on the portfolio and the assets. And I'd say I'd probably want to punt that one to one of our CIOs. This is probably more well-positioned to do the comparison. But we look at it from a total portfolio context. And oftentimes, if the investor is interested in ultimately the net return that they're generating, the absolute fee becomes less of a primary concern.
I do want to dig a little bit deeper, too, into real estate. What specifically are you guys looking at? Obviously, interest rate sensitivity there. There's also lots of questions still about the office space. I was looking at some numbers in terms of REITs and logistics and kind of industrial REITs. They are down on the year. So I'm curious where you are finding opportunities and the kind of returns you can anticipate on that front, maybe this year or looking out over the next couple of years.
Sure. Well, actually, amongst our North American client base, real estate was a very strong area of investment. And given where we've seen sort of the markets headed, we think that a lot of sort of the price, the price discovery has kind of happened. That there's probably a trial now that the pricing has kind of reached equilibrium. And a lot of investors that might have been turning more towards a opportunistic credit, certainly around the pandemic, post-pandemic, opportunistic real estate, are looking more now maybe at good values in core and core plus real estate. And certainly commercial real estate, it's a part of our portfolio, but not a very large part by any means. And so there's other areas when you look at the growth of digitization, when you look at the amount of streaming that you and I and many around the globe are doing, you're seeing other kinds of assets, data centers, you're seeing even film studios, you're seeing other kinds of real estate opportunities that present themselves and are certainly prevalent in our portfolios.
Okay, Raylan, speaking of digitization, we promised we'd talk about AI. It was a huge theme for Carol last week out at the Milken Institute Global Conference. What are the opportunities when it comes to AI in your world? Is it data centers? Is it energy? Is it utilities? What are they?
It's all of that and more. You know, when you think about, you mentioned the distributions are coming down. If you were to sell an asset today at the same value, but a year later, you're already going to get 300 basis points less in terms of your overall investment rate of return. What does that mean? That means a laser focus on EBITDA. That means pricing power on the top line. But AI, what we're seeing is, in fact, we've reached out to the managers in our portfolio and said, how are you expressing AI in what you do on a day-to-day basis? Over 90% said that they are either currently have integrated AI into their sourcing, research, and portfolio implementation activities, or have discrete plans to do so. So I think when the equation really shifts to an EBITDA, how are you going to create greater efficiencies? How are you going to look at cost rationalization? That plays a huge part across all industries. But we're also seeing managers think about new product development or even augmenting capabilities or product lines that good companies already have. So I'd say it's quite pervasive across sectors, across different kinds of investments. And it's certainly an exciting time.
All right, going to leave it there. Hey, listen, Raylan, so nice to get some time with you. Really appreciate it. Raylan Lambert, she's Global Alternatives Leader at Mercer Alternatives, joining us on this Wednesday. And still to come, speaking of AI and making money in AI, what is the smart AI play? We're going to ask. It's a question in this week's new issue of Bloomberg Business Week. Details on the other side.
Hey, before that, let's get a check on the latest world and national news. We had Amy Morris in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. Slovak Prime Minister Robert Fico is in very serious condition after being shot during a public appearance today. This is the first assassination attempt on a European leader in more than 2 decades. The White House has released a statement saying that President Biden was alarmed to hear reports of the attack on Fico and that the U.S. Embassy is in touch with Slovakia's government and stands ready to assist. President Biden has challenged Donald Trump to a debate, and Trump has accepted. So now there will be 2 campaign debates, one on June 27th, hosted by CNN, and on September 10th, hosted by ABC. CNN says its debate will be held in its Atlanta studios. There will be no audience present. President Biden didn't want an audience for the debate. Trump wanted a big crowd. President Biden's campaign also doesn't want to include third-party candidates, but CNN is holding the door open for a third candidate who meets polling and ballot access requirements. As Russian forces renew their offensive in Ukraine, U.S. officials say help is on the way. Secretary of State Antony Blinken announcing a special fund set up by the U.S.
So this will assist Ukraine in acquiring those weapons. 2 is to focus as well on something that Dmytro just talked about, investing in Ukraine's defense industrial base.
Secretary of State Blinken says Ukraine can also use the fund to purchase weapons from other countries. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ very much in the green, with the S&P 500 index at 5301. Right to the numbers here. Big day for the U.S. stock market. We've got the S&P, as I mentioned, up 1% right now. The Dow up 278, up 0.7, and NASDAQ up 220, a gain there of 1.3%. 10-year, 4.35%. We have got the 2-year now yielding 4.73%. Spot gold is advancing 1.1%, 23.84 the ounce. And West Texas Intermediate crude up 0.9%, 78.72 for a barrel of WTI. Bottom line here, S&P above 5,300, 5301 right now, and on track to hit its 23rd record of 2024. Air coming out of the meme stock rally. GameStop shares down now by 24.1% today. AMC Entertainment lower by 21%. Again, recapping, stocks are rallying. CPI Wednesday with the S&P up 54 now, higher by 1%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, AI has once again ignited a technology ramp-up and CapEx spend across every industry, fueling a major investment play, as we were reminded once again by longtime market watcher and equity bull Ed Yardeni, appearing this morning on Bloomberg Surveillance.
Everything's technology. So my pet theory here is that when you look at the stock market, you have to think of every stock as a technology company. They're either making it or using it. If they're not using it, they're going to lose it.
All right, that was Ed Yardeni earlier. Basically, everybody's a technology company. You're either using it or you're making it for others to use. All right, the great AI utilization and investment race, it is on, and yet Silicon Valley, the heart of innovation and the startup community, is searching for its piece of the action. And that's what the remarks of this week's new issue of Bloomberg Business Week is all about, written by Bloomberg's Brad Stone and Rachel Metz.
That new issue out tomorrow. It's already online at Bloomberg.com/businessweek. It's great to be talking once again with the editor of Bloomberg Business Week, Brad Stone. He's author, too, of many books, including 2 on Amazon. The latest being Amazon Unbound, Jeff Bezos and the Invention of a Global Empire. Brad, usually on the West Coast, out in California. Lucky for us, though, here in our New York headquarters. So, Brad, a busy week on the AI front. We got to catch up with you at the Bloomberg Tech Conference on Thursday. And a question that I asked you there was, you know, you've been studying technology for years. You've been a participant in it for years as an observer, as a writer, as a journalist. And I wondered about corollaries between what we see with AI versus what we saw with the 90s with the rise of the internet, what we saw at the 2000s and social media, and how this time is different. And you kind of dive into that a little bit when it comes to the remarks section.
Yeah, thanks, Tim. I mean, that juxtaposition is almost what led me to this essay, because I felt like with the internet in the 90s, sure, we didn't know you know, if the line would be linear or not, but you could predict with a fair amount of certainty that this thing was going to be impactful. Same with social networking. We didn't know how long it would take, but that most of the people in the world would be networked together in some way. I feel like the questions in AI are much more fundamental. I think that, you know, we're a community in tech in Silicon Valley that likes to have answers, and I think that, you know, I wanted to acknowledge a certain amount of what I'm calling AI ambiguity exists. For example, the extraordinary increase in the capabilities of services like ChatGPT, which have been exponentially getting better. Will that continue, or will it flatline? OpenAI gave a demonstration of a new multimodal chatbot earlier this week, and people thought it was a marginal improvement. I think the consensus was less than impressed. Google at Google I/O announced a number of new things, the biggest one being a redesign of the search page to feature more AI content. So will it keep getting better? Will the big tech companies completely dominate and own the AI opportunity, or is there room for startups? So many questions, not a lot of answers. That's why I called it the age of AI ambiguity.
Well, and meantime, I feel like every conversation we have on in the investment space, Brad, is all about, okay, this is how you make money in AI. Having said that, I do wonder, is it ultimately going to be the big players, because the cost of either data centers or the computations,
training these things,
it's expensive. So I do wonder, ultimately, is it going to be led by the deep pockets of a Microsoft or an Alphabet and others?
Yeah, that's another great uncertainty. At the tech conference that you mentioned, the co-founder and CEO of Anthropic, Dario Amodei, said it could cost $100 billion to train like a future model. I mean, look, it's going to require ever more amounts of computing power and resources to train these models and get them to be exponentially better. So who can afford that? At the same time, Mark Zuckerberg and Meta spent $100 million training Llama 3, acquiring the processors from NVIDIA, very specialized and hard to get processors, and then they've open sourced it. So they're harder and harder to do, and the economics are being eradicated. And so what does profit making for the foundational models look like? It's another of these great ambiguities.
In the piece, you and Rachel talk about a small company that's called Atmo, and the idea is they are able to forecast weather using data better than traditional forecasting. Can you take us through sort of the story here as to why it's sort of exemplary of the challenges that startups face competing not just against the big folks, but against the proxies of the big folks?
I mean, it's interesting because weather forecasting, after calculating ballistic missile trajectories, was the first application of the ENIAC supercomputer. Wow. And so weather forecasting has always been the province of powerful computers. The promise of Atmo, this 24-person startup in San Francisco, is to apply AI. So systems that not only can crunch the numbers, take in the sensor data, but learn from their mistakes. Just look at all the dimensions of these complex mathematical atmospheric equations. And what was interesting is, as I was talking to this company, and I was getting sort of interested in what they're doing, Google published a paper in an academic journal announcing its own weather model. And so it was a perfect encapsulation.
Yay!
Yeah,
Wait.
right. Of does this impact this company at all? I mean, they put on a brave face and say it's a paper, it's not a product. NVIDIA has also talked about weather technology. Nobody other than Atmo is selling it. They've got some good customers like the U.S. Air Force, but we don't know. And so I guess the case for startups and their backers is it's like classic Silicon Valley. If you specialize in it, if it's what you do, if you are emphasizing reliability, particularly when it's mission critical to the U.S. Air Force or the government of the Philippines or whoever else their other customers are, can you get that level of service from a Google or an NVIDIA? They've got other fish to fry, but this is what Atmo does. So that's the argument that startups are making, where there might be a lane here, even though the resources, the demands for talent and PhDs do seem to favor the big tech companies.
All right, so what does the venture capital world say? You guys had Vinod Khosla also at the Bloomberg Tech Summit, but I'm just curious, so what are they saying? Because I feel like we've talked to seed investors, some venture capitalists, and they're like AI, the opportunities. But I'm just curious what they are seeing. Are there deals to fund, or are they seeing a slowdown?
I mean, they're making an extraordinary bet. So we quote the new Stanford AI Index. Venture capitalists funded 1,812 new AI companies last year, a 40% increase from 2022. And so they're placing the bet. Like all of venture capital, they're trying a lot of things. Not all will work. I talk in the story
about... We have a great chart, too, that's, I guess, showing some of the, investments that have been made, or the foundation.
Yeah, these are the models, and this actually shows how the largest models are the province of the big tech companies. But, I've got this parable in the story of dimes and steamrollers, which is, you can go pick up dimes in front of a slow-moving steamroller. That's the tech platform. It might be dangerous, but if you're nimble and if you know when to get out of the way, it might end up working out. And I think that's the strategy here. That the big tech platforms are going to try a lot of things, but their attention's a little diffuse. And there's still a lot of opportunity for companies that are nimble and that specialize.
Hey, Brad, 30 seconds. Give us a big takeaway that you left Thursday with. I mean, you put on this incredible tech summit out in San Francisco. Some huge guests out there. What's something that you learned and took away from the way that AI is sort of going to impact us moving forward?
I mean, I think my first takeaway is that San Francisco is back, baby.
Yeah, it felt like that.
Yeah, just the community and the speakers and the energy in the room. From the beginning, when the Amodei siblings came and talked about Anthropic, Adam Newman of WeWork, to the end, Evan Spiegel of Snap. And, sometimes these conferences can feel a little bit like air coming from the balloon. And it just felt, a lot of energy all day. I think, part of what inspired me to write the story is if we're talking about AI takeaways, that there's still more questions and answers, and that's why we called it the age of AI ambiguity.
We are early on. Brett Stone, thank you so much. All right, coming up next, one more thing. How about a luxury rental? Also, an at-home IV drip included in that.
No thanks.
That's coming up.
Company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Uber is launching shuttle bus services to and from airports, concert venues, and sports stadiums, bringing a lower-cost service already available in its overseas markets to the U.S. as inflation remains stubbornly high. Uber will work with local fleet providers who employ commercially licensed drivers and facilitate the bookings at a fraction of the price of its usual UberX rideshare services. Uber now higher by 1.2%. Rival Lyft is down by 0.4%. Netflix will air 2 National Football League games this coming Christmas Day in the streaming TV giant's latest push into live events. The 3-season pact will also see Netflix host at least one Christmas game in both 2025 and 2026. Netflix shares down by 0.4%. The agreement does mark the first time that Netflix has licensed the rights to one of the world's premier sports competitions, and the first time it will show live football, the most popular sport in the United States. Boeing is facing possible criminal prosecution after the Justice Department found the company violated a deferred prosecution agreement tied to 2 fatal crashes half a decade ago, intensifying the crisis engulfing the embattled U.S. plane maker. Boeing shares down now by 1.6%. Converse is cutting some jobs as parent company Nike trims its staff across divisions in search of cost savings. Nike is undergoing a $2 billion cost-cutting plan that includes slashing 2% of its workforce. Layoffs have hit its Oregon headquarters across 2 rounds. And those are our top company stories at this hour. I'm Charlie Pellett, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio and Television.
It is Bloomberg Business Week on Bloomberg TV and Bloomberg Radio. Let's go to Washington, D.C. now for a check of the latest world and national news. We had Amy Morris in the 99.1 newsroom. Hey, Amy.
Hi, Tim. As Russian forces renew their offensive in Ukraine, U.S. officials say help is on the way now. Secretary of State Antony Blinken announcing a special $2 billion fund set up by the U.S.
So this will assist Ukraine in acquiring those weapons. 2 is to focus as well on something that Dmytro just talked about, investing in Ukraine's defense industrial base.
Secretary of State Blinken says Ukraine can also use that money to purchase weapons from other countries. The Biden administration has informed Congress of a $1 billion weapons transfer to Israel. That's after President Biden paused a bomb shipment last week to head off a full-scale attack on Rafah. Now, as fighting against Hamas rages across Gaza, former CIA Director David Petraeus says Israel probably should shift tactics.
I would welcome seeing a commitment that we are going to make your lives better, civilians in Gaza, clear the enemy out of your neighborhoods. We're then going to seal off those neighborhoods and give you biometric ID cards. We're going to flood them full of humanitarian assistance. We're going to restore basic services, and we're going to aggressively rebuild all the damage that has been done in the course of this particular war.
Retired General David Petraeus spoke with Bloomberg News editor-in-chief John Micklethwaite at the Qatar Economic Forum in Doha. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris. Now back to Bloomberg Business Week with Carol Masser and Tim Stenivek.
All right, Amy, thank you so much. All right, folks, so you want a luxury retail, right? Great, nice building. Maybe there's a fitness center. There's a pool. There's like
Maybe
all
a
these
Himalayan
amenities.
salt spa.
Yeah.
Where you can relax and look out at the Pacific Ocean.
We're all in, right?
Yeah, sounds good.
And then, there's one other thing that you're going to have to pay extra, though. How about an at-home IV drip? Because apparently it's become a thing at some of these luxury rentals. They're happening in California. I think it's also happening in Florida, some other places around the country.
Okay, this article courtesy of the folks over at the New York Times, and it's all about the booming demand for these IV drips. There are some issues, though, Carol, that they bring up in the piece, which are...
Why do you always go to the bad stuff?
Well, you're sticking needles in your arms. I think that, I think some people would say, wait a second, is this something that is medically necessary?
Good for a hangover, can feel better.
So proponents argue, though, some folks,
Brighten
quoted in
your
the story,
skin,
push back and say, at best, this
Boost
is
your athletic
the
performance,
same thing as
Mr.
drinking a
Cyclist.
glass of water. And at worst, it could lead to a bad reaction if you have an underlying health condition.
I'm having some fun, but there are some different companies. I think Drip Hydration is one of them, and it says that they can help you improve your sleep, mental clarity, brighten your skin, boost your athletic performance. However, as the Times points out, there is scant scientific research to bolster these claims. And if you're wondering what it costs, it's about a 30 to 45 minute treatment. Costs anywhere from $100 to $1,000, depending on the concoction and the provider. And what you might want to know is it varies state to state who can actually do this. In California, there are some rules. Florida, not so much.
The problem with this, as I see it, as a person who doesn't like getting shots, is the needle element here. Why have a needle put in you if you don't need one?
Guess you're not getting Botox either. What's interesting is this Times, great story, great read, highly recommended, but they profile one individual, pays about $6,200 a month for a one-bedroom in this building in Park Santa Monica. It's an LA building where residents have a lot of amenities, and then he's paying additionally for this at-home IV drip.
If you think that's expensive for a one-bedroom, a three-bedroom here is going to set you back $38,000 a month. So that's the type of environment we're talking about here.
Yeah, I guess money is no option or no obstacle.
I guess.
A little bit of both. All right, everybody who's watching on television, Bloomberg Television, the close is coming your way in just a moment. For those of you watching us, Tim and me, we're going to talk a little bit about corporate America never really stopped relying on forced labor. An incredible story, excuse me. That's coming up.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And a very good afternoon, everybody. We are just about 60 minutes away from the closing bell on this Wednesday. We've got stocks up above 5,300. 5,301, in fact, is the current print on the S&P 500, up 1%. NASDAQ up about 1.5%, or just shy of that. We've got a lot coming up, though, in the next 2 hours. Or
yeah, it might feel like
minutes.
it's going to feel like 20 minutes, Carol, because this show is going to go by so quickly. Hey, we may see markets on a whole are higher, but Boeing shares are lower. The company is at risk of criminal prosecution related to 2 fatal crashes half a decade ago. We're talking about the 737 MAX. We're going to have Greg Farrell stop by and tell us a little more about what's going on.
Get into the legal understanding of the story, but the woes, bottom line, continue for Boeing. In the magazine, Bloomberg Business Week, incredible story. Corporate America never really stopped relying on forced labor. Inmates do billions of dollars of work for companies. You probably maybe know that. It's been around, a trend for a long time.
I didn't know this.
You didn't know this?
I had no idea.
You really didn't?
Yeah, I didn't know this.
All right, well.
It's pretty disturbing.
Yeah, also work for governments each year. It's a Bloomberg Big Take as well, so we're going to get into exactly what's going on and why it continues.
Also, she worked her way up from selling cruises door to door to becoming the CEO of Celebrity Cruises. Lisa Lutoff-Perlo is back, and she's going to tell us about her newest gig.
Yeah, looking forward to that. You're going to like it, too. Former COO of VMware, CEO of Cohesity, Sanjay Poonen is going to be back with us. He's talking about the latest deals with IBM and NVIDIA. And yeah, folks, I'm going to say there's an AI play here.
Hey, first up, check on the day's trade and top business stories. Here's Charlie Pellet.
Hi, thank you very much. Going to begin with the year-to-date number in the S&P 500 index, up this year by 11.1%. A rally today, a 1% gain on the S&P to 5,300 right now, 52.99, and a decimal point up by 53 points. We have got the Dow up 270 now, up 0.7. NASDAQ up 215. That is a gain of 1.3%. But again, S&P trading right around 5,300. 10-year, 4.35%. The 2-year, 4.73%. We've got spot gold today advancing by 1.2%. And West Texas Intermediate crude oil up now by 1%. Traders sent stocks to records as bond yields fell after this morning's CPI report reinforced bets that the Fed will cut rates as early as September. Gargi Chaudhary is head of iShares investment strategy at BlackRock Financial Management.
I think this reiterates what many investors have been hoping and watching for, a step in the right direction. So with a core CPI that it was softer than many had expected, and a headline inflation that was softer than many expected, the details really matter.
Chaudhary was interviewed this morning on Bloomberg Television. Samir, coming out of those meme stocks today, GameStop lower now by 22%, AMC down by 21%. S&P on track to hit its 23rd record of 2024, again advancing by 1%, now at 52.99. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We're going to stay with the markets, folks, for a moment. Under an hour to go until the closing bell. S&P 500 definitely notching some significant moves today. New highs, bond yield slumping. We talked about that earlier. As a slowdown in inflation, reinforced bets the Fed will be able to start cutting rates as early as September. That retail sales number, though, also playing into expectations about Fed moves.
With us now is Abigail Doolittle. She's Bloomberg News Chief Markets Correspondent. She's here in the Bloomberg Interactive Brokers studio. Abigail, we've talked a lot about today's moves as they relate to economic data that we got today, retail sales, and then that inflation print, the CPI print. But we're going to you because you've got your eye on the charts and what you're seeing when it comes to technicals here. So give us an overview of how this sort of plays into what you've been watching.
Well, I think the key charts to look at right here are the S&P 500, not surprisingly, and then let's take a look at the 2-year yield. So the S&P 500 on today's new record high has busted the wonky pattern that we talked about as a possibility, which would have been a double top when the second high was slightly lower, because I would have told you that the buyers were less enthusiastic, Now we know that they're more enthusiastic in terms of taking the index higher, but the RSI is still at lower levels than it had been on the last high, and it's certainly at much lower levels than it had been at last December. So you still have this bearish divergence or this tension. It suggests that we could see investors run stocks up just a little bit more here because the RSI still is not even officially over were bought. But when we take a look at the longer-term S&P 500 charts, the momentum is really very bearish, and that's over a series of years. It just suggests that the rally out of the 2022 lows, it's just too much, too far, too fast, and that there's other concerns. And I would suggest that it probably has to do with, not surprisingly, the Fed and inflation. If we bring the 2-year chart into this, it is actually at an interesting sort of make or break level. If the 2-year yield goes, let's just call it, I don't know, 5 bips. This is not official, but I'm just taking a fast look here. I would say if it goes about 5 to 10 bips lower, then there's a good chance it's going to go much lower, back down toward 4%. But if not,
that's pretty remarkable.
Yeah, it looks like it's setting up for a fast move, either significantly higher or significantly lower. I still think it's going to be significantly higher. I think it's going to use this whole expansion over the last couple of years to move back above 5%, maybe 6%, even closer to 7%. Whether that's on inflation or some issue with supply of treasuries or something else along those lines, that's not entirely clear. But that said, we're really on the cusp there. Whereas last week it seemed super solid, but today's move down. Now, what's so interesting about today's move down is, one print does not a trend make.
Exactly.
Investors are so happy about
this is exactly what we talked about earlier.
Yeah.
Exactly. And that's what we talked about the previous 3 inflation prints, right?
Because that is a trend.
That's a trend line.
Yes. And so this is just one print, and it's not even significantly cooler. It's 0.1 of 1%. But I think investors are willing to take anything, especially on the heels of Fed Chair, I almost said Ben Bernanke, of Jay Powell 2 weeks ago saying that they're not going to be hiking this year. I think that the two, when you put them together, investors are like, yes, we still have some support here from the Fed. There's still a chance that they're going to cut 2 times. There's still a chance that they're not going to hike. I would argue we should still be talking about whether or not, though, 2024 will, in fact, turn out to be the year of the cut. I'm not convinced.
Totally agreed. I will, though, just focus a little bit on that retail sales report, which did come in much weaker, certainly weaker than the month before. The month before was also revised downward, but it was such a contrast. We had some conversation earlier about that. When you've got such a strong month in the prior month, you tend to see some weakness later on. But nonetheless, the numbers did indicate,
that's a good point.
Slowdown, and it's also kind of a great marker initially on what's going on in this current quarter.
Yeah, that's a really great point when you put that together with it's exactly what investors would want. I would say though that we need some more data there too to suggest that that investors really are truly pulling back. On the other hand, it might be that Goldilocks landing where it's not too hot, not too cool. But stocks, the charts, and a lot of it's very wonky, and without being able.
Is it getting tired, the equity trade?
Maybe it's getting stuck. So maybe that's a different way of putting tired.
So Abigail, we're almost done with earnings season.
Yes.
We just got a slew of economic data
NVIDIA
today.
is still to come next week.
We still have NVIDIA to come.
Good point.
But apart from NVIDIA,
I know.
what's sort of the next catalyst that you're watching, at least from a charting perspective?
Well, that's the interesting thing. I'm not sure that one stands out, and it may be that we're not going to know until we know. Maybe it'll be NVIDIA, maybe it'll be PCE, maybe it's going to be the June Fed meeting. I would be surprised if it's that far out because I don't think that we're going to see. So I was actually surprised about this, drawing this today on an S&P 500 chart. This year has basically been a range. January was up, some of February was up, but most of February actually forms the bottom of a range that was refound in April. We're right above the top of that range. Maybe we dance along the top of it for a little while as investors, continue to hope that inflation is gone and things are going in the right direction. But I think that the pull of that range back below 5,000 is going to be pretty strong. It just points to uncertainty. It points to people not knowing. So it's unclear what that next catalyst is going to be. But I think sooner than rather than later, we're going to probably see a trickle down. One interesting thing that I'll just point out very quickly is, President Biden, the Biden administration yesterday launched tremendous uber tariffs against China. Stocks did nothing. Back in 2018, we sold off multiple times each time. Now, I think that you could make the...
We've gotten a little used to kind of the tensions
exactly,
here,
and there's a bit more of acceptance of a protectionist view or stance, I would say, or at least that's what the markets are telling us right now. But it's interesting. And I think that that's worth just keeping in the back of our minds. I'm not quite sure what it means, but right now, but especially around chips.
One last quick question. The outperformer, NASDAQ 100, up about 1.5%. I'm looking at the SOX, which is now up about 20% so far this year. But I'm looking at, we had about a 1.7% gain yesterday, a 2.6% gain today. We just continue to see momentum in that space. I get what's going on, and I know we've had some calls, I think, out of Wall Street, but nonetheless.
Yeah, I'm glad that you're bringing that up, and that's actually a perfect index around China. You could make the case, and I think we talked about it a couple weeks ago, that the weakness for the chips out of the March highs down toward the April lows wasn't just about FMCI and just some AI cooling off, that it could have reflected some of the tariff fear. Sometimes it happens beforehand. But the interesting thing is we are still at a lower high on the SOX. The SOX is not making a record high, and all I can say is the range there is ugly. It's messy. It tells you investors have really no clue. So I'm glad that you brought that up. I would say that suggests the possibility that we could see some very volatile action in the days and weeks ahead.
All right, always great to get your check on the markets. Abigail Doolittle, Bloomberg News Chief Markets Correspondent, joining us here in our Bloomberg Interactive Broker studio.
Okay, the index is maybe higher, but one stock moving lower today is Boeing. Shares down by about 1.8%. This as the company faces possible criminal prosecution after the U.S. Justice Department found Boeing violated a deferred prosecution agreement tied to 2 fatal crashes half a decade ago, intensifying the crisis engulfing the embattled U.S. plane maker. We got with us Greg Farrell, Bloomberg News investigative reporter for legal enforcement. He joins us here in the Bloomberg Interactive Brokers studio. So, Greg, a filing coming out late yesterday. What was buried in this filing in terms of what prosecutors allege Boeing did?
Well, this all grew out of a deal from 3 years ago, a deferred prosecution agreement, following those horrible crashes in 2018 and 2019 of the 737 MAX jets. And the government investigated, criminal investigation, and resolved it just